Welcome to TopstepTV.
Good morning, good afternoon, good evening, and yes, welcome to TopstepTV. For opening call, congratulations, you're at the right place at the right time. And let me just turn this volume down here. There we go. We are much better right now. Good morning, good morning, good morning. I'd like to say that you're at the right place at the right time. I did say that, right? He's Laverne, and I'm Shirley. We have an exciting, informative, and educational programming for you today. Throughout the week, we will be your trading buddy, your trading mentor, your newscaster, your fellow trader, and even that cool chick who trades with the boys on Fast Market. So get yourself ready. Get ready. Top-notch, up-to-date market knowledge and know-how. And we've got our good friend, John Hoagland. What's up, brother?
Schlemiel, Schlemazel, Haas and Pfeffer Incorporated. Welcome everybody to Opening Call. Laverne and Shirley here, Monday, November the 13th. Our focus is always on accurate context, good risk management, and remaining patient. I hope everybody had a nice weekend. Eddie, you said you had a pretty relaxing weekend, it sounded like.
Oh, like Sleep City. You, John?
Yeah. Yeah, largely the same, you know, did a few things, learned a few things, a couple things done around the house, and we're ready for Monday now, man, and we got to be ready for these markets.
You know, speaking of Laverne and Shirley, I met the big Ragu. Remember the big Ragu? Yeah. At a Hollywood show, and his name is Eddie also. And when I met him, I'm like, yeah, my name's Eddie. He's like, hey, two heads are better than one. I'm like, that's funny. First time I heard that
sounds like
one.
The big Ragu.
I've gone from rags to riches. Awesome person. Well, let's get busy here. Get busy. Welcome to our new week here. As John said, lucky 13 in November. U.S. stocks inch broadly today here, lower as investors look ahead for the key inflation data later this week. Moody's had some comments. To downgrade its U.S. credit rating outlook. Johnny's got some more detail on that. The main indices on Wall Street closed higher on Friday. That was their second straight week of gains. U.S. Treasuries were little changed. Technology stocks outperformed, helping the tech-focused NASDAQ. So what we're seeing, our good friend Joe Biden and the Chinese counterpart Xi Jinping will be meeting face-to-face this Wednesday during a summit in San Francisco. And I just hope Joe doesn't say, I'll take the number 17. So, John, what do you got?
Well, as far as economic numbers this morning, a little bit thin, but we did have the OPEC monthly report come out at 6 o'clock this morning. Whoops. There we go. I had the YouTube open and it started playing on me. So
we both did. That means good luck.
Yeah. Good luck. Right. At 10:30 this morning, there's a 6-month and 3-month bill auction or auctions. 1 p.m., the U.S. budget balance is due out. As far as the rest of the week is concerned, inflationary numbers Tuesday and Wednesday, the CPI on Tuesday. Lots of talking Feds throughout the week. There's talking Feds. Well, I didn't see really anything on the calendar today, but for the rest of the week, a lot of talking Feds. Tuesday, of course, the API crude number coming out. Wednesday, PPI retail sales. EIA crude stocks, they should be running their release this Wednesday, as we missed it last weekend. And again, a lot of talking Feds. Thursday, jobless clams, Philly Fed, talking Feds, industrial production. And Friday, again, a lot of talking Feds. As far as economic numbers this week, that's not all of them. That seems to be the most important ones. As far as earnings, we're going to get a lot of our bigger retail earnings this week. Today, Tyson Foods missing as far as revenues are concerned. They came out with some guidance that a drop in demand for meat is to blame for that. And then Tower Semiconductor came out today. We got Target tomorrow morning, so we'll check that out tomorrow morning, or actually Home Depot tomorrow morning. I think Target's on Wednesday. But a lot of retail earnings due out this week, a long list, of course. The government may be facing another government shutdown if they can't come to some agreement by Friday. That is going to increase the uncertainties in the markets this week. Yes, the Moody's downgrade. It's the third rating agency to downgrade U.S. Debt. The CPI looming, big retail earnings. That's about all I've got here, except for the VIX is up about 6% this morning. A little bit of fear coming back into these markets. 15.11 last I checked. Dollar index also higher this morning, 105.91. And the yield on the 10-year also higher this morning, 4.67% the last I looked. It's going to be, as always, interesting as well as challenging this week.
Very interesting. Well, you got to give them credit. They're always putting something in front of us to make this market interesting. Very interesting. Congratulations to them. I always got something. Oil. Earl. Right now we're looking at what are we looking at? 77.37 right above settlement. But it hovered just under the flat line. That's obviously amongst concerns over the global demand, especially top crude import. China watching for signs of further potential policy tightening from the Fed that could hit the economy, the world's biggest oil consumer now, crude. Futures traded 0.1% lower, and Brent also dropped 0.1%. So we'll keep an eye on that. Today, folks, is Krispy Kreme free dozen, World Kindness Day. So be kind to your fellow human and, of course, your loving pet. So if you haven't got your free dozen, run over there now. You might still be able to. The first 500 get a free dozen glazed donuts, Krispy Kreme. Also, the one thing I want, the Kuan, the Kuunan, all right? Kuunan. Remember that dude with the buffalo head? Remember him, John?
Oh, yeah, the QAnon guy.
QAnon. He's running for Congress, all right? As a libertarian in Arizona. So, boy, I tell you, here in America, you can do whatever you want, almost. You can run for any position you'd like, almost. But good luck to him. I sort of like that hat. It was a cool hat. But anyway.
Yeah, that was quite the outfit, wasn't it?
It was. Yeah, well, he got center stage, I tell you, on that one. And he probably didn't want that. But anyway, let's take a look at our charts today. Johnny, what do you got for our contestants?
All right. Well, starting Monday of Kindness Week, of course, always remember to pray for peace. I hope all the veterans had a nice weekend this weekend. And again, thank you very much for all your service. So,
we got a frozen hogue on a stick. Oh my goodness. So do I do like a song and dance now or something? Or what do I do? Yes. We're going to get Hogue back in here in just a moment. I apologize. The EMP that sort of hit us over his house. We'll be right back here. Come back, Johnny. Well, anyway, taking a look at our ES. ES took a little drop here right now. Right now, we're looking at a 44.14.5 in the ES on my 30-minute. Sellers came in here also in the NASDAQ. NASDAQ all the way down to 15,530 even. One thing here is that crude back on the bull. We're getting some close to some daily tops here. 77.54. For our gold, those in the gold, I'm keeping an eye on settlement. Settlement looks like a bottom so far. I'd like to test that level, 1937.70, and I think if we do go below that, we might see some more southern movement as far as that goes. So anyway, let's see here. We've also got, let's see. I don't know. Waiting for Hogue to get back here. But I know. We got to get to these. All right. So yeah, we're going to do a coffee break. Get yourself a new coffee, and we'll be right back. I promise. John? And we're back. Presto, changeo. Johnny, what happened?
The dog ate the internet.
Your dog ate the internet.
I've got, extension cords and
I know.
bars and everything. She stepped on it and there went the internet. I rerouted it because she pulled it out of the router like 3 weeks ago. So I rerouted it. Now she stepped on the plug and it popped out. So
remember, it is kindness day.
Absolutely.
World kindness. So you can't yell at her.
And no, it's not her fault. She's just being a dog.
So Johnny, let's try this again.
Okay.
What do you got for our contestants today?
All right. Well, let's start again. We're on the daily in the S&Ps.
Yes.
We had a key close above this trend line. Now remember this trend line: 1, 2, 3 points of contact, maybe 4 points of contact. We closed above it on Friday. Does anybody remember what I said on Friday? Be careful if there is a late rally on Friday. Do not sell it. And that is exactly what happened. I mean, it just kept grinding higher and higher and higher. These were momentum buyers. We added 11,000 in open interest on this big push to the upside on lower volume. It was emotional. It was just eating shorts the entire way up. Again, we did add some open interest. It's still not all that impressed with the open interest that we've seen on this up move, but it doesn't matter what I think. Take a look at the 30-minute chart here.
Yes, it does. Johnny, I felt naked without you.
I apologize, Eddie. I apologize.
But I like being naked.
I was unavoidably detained. So, big directional day. on Friday. Trend day, the entire day. We do have single TPOs down here, right around 4,400. 4,400 is a big fat round number. It is going to be a focal point today. We what am I looking at here? Overnight inventory. Well, we started here. We're trading there. So no real overnight inventory. But on the profile, there is a late spike. You guys hear me talk about the late spike once in a while. And the late spike is when the market extends late in the day and then the market closes without giving the market the opportunity to show acceptance through time. So the base of this late spike, I'm going to make this really big so we can all see it. And I'm using this bar, the top of this bar for the base of the late spike. So the base of the late spike is 44, 24, 25. Okay, what does that mean? Well, when we open in or above a late spike, it's a higher probability of acceptance of higher pricing. When we open below the base of the late spike, it is possible rejection of higher pricing and acceptance of lower pricing. We've still got a gap that we got halfway through on Friday. We haven't finished closing that gap. But again, with this late spike to the upside, the market is currently showing rejection of higher pricing. We'll see what that looks like on the open if we can get there. So again, the profile, single TPOs here, that those single TPOs close at 43.99 quarter. Remember that 4,400 big fat round number? It's a psychological number. Even Jim Dalton was talking about it. He wants to see this market hold above that. Otherwise, we may see more of a consolidation or into a pullback to the downside. It looks different on the NASDAQ as it usually does. The NASDAQ and the S&Ps are very similar, but they often tell different stories. So this is the weekly. We've got, our reversal week. We got a continuation last week, all above that same trend line we were just looking at in the S&Ps on the daily chart. What did we do? Well, we broke out and held above this trend line 1, 2, 3, 4 days. Monday, Tuesday, we broke out. We held it as support. And then Friday, we had our big rally, our late Friday rally that you should never sell into. So technically, this market is primed for continuation to the upside. We added 7,100 in open interest on Friday's emotional trend day to the upside. Emotional trend day to the upside. Late momentum buyers came in and pushed this market higher all the way until the end of the day on Friday. The volume and open interest were good. Again, we had some decent volume on Friday. Open interest, again, adding 7,100. On the 30-minute chart, however, and on the profile, we did not leave any kind of late spike at the end of the day on Friday. The market kind of held up here, didn't close on any kind of real range extension. So we don't have a late spike in the NASDAQ where we do in the S&Ps. Overnight inventory, we started here. We're still in that area. If it is, there may be a little bit of short overnight inventory in it. But we will, of course, have to see what it looks like. I'm thinking the S&Ps with the late spike might be more of a leader this morning than anything else. Remember, there's still a lot of uncertainties out there. Geopolitical issues, possible government shutdown, inflation, all of those things are on the minds of traders. So we'll see how these traders and investors treat these markets this week. Again, no late spike in the NASDAQ, so lower probability of rejection of higher pricing. Watch the S&Ps. Crude oil. All right, here's the weekly. 3 straight down weeks. It's taken price back to an area, a long time frame area of balance, of range bound, of chop, of even on the daily chart, this looks, or on the weekly chart, this looks choppy. So remember, crude oil is in rollover. By the end of the week, I'm expecting to be trading the January 2024 contract. January already. Oh my goodness. So the daily chart, we had, Monday, Tuesday, we had the break to the downside. We've kind of settled into a potential area of range, which tends sometimes to happen During rollover, remember the longer time frame traders aren't really interested in getting directional. They will be pushed to being directional, but their focus is getting a cheap or making money on the rollover. They have a lot of contracts in the December contract. There's already more open interest in the January contract, although the volume still remains higher in the December. I'll be monitoring and let you know when I would be moving to the January contract. The OPEC meeting today and the API and EIA are back on schedule. So the short time frame balance, what are we looking at here? Well, I think we're looking at 77.73, the high from Friday, the low from Tuesday, 74.91. That's going to kind of envelop any range bound activity. If we break out and bring volume or momentum outside of those, you have to go with it. On those extremes, we're thinking we're better off fading it. Of course, this is a little bit of a longer time frame look than most of us are looking at. And here is the 30-minute chart. So we had a pretty good up move on Friday. We lost 3,000 in open interest, however. The market was getting up near the high of the area of balance. We did put in a week low. In other words, there's no excess on the high here. Excuse me, a week high. There's no excess on the high here. We have a slight degree of excess on the low here. The market has opened in range and in value. It took a look higher, maybe trying to take out this weak high up here. So far, it's been unable to, but the market opened in range and in value. So that says, well, maybe better trade locations might come as the day goes on. As far as the profile is concerned, yesterday was a normal variation day with a weak high, low excess, low. Market might actually go looking for new information or new levels to facilitate trade outside of possibly the range from yesterday. But so far, I'll be waiting for the initial balance to establish itself before really trying to get too involved here in crude oil. Now taking a look at gold, I'm sorry if it seems like I'm rushing through this, but we are
real quick here. When we do switch our month, January is the F code. Okay, it's code for January is F. Just so you know, in crude when you do see it. But gold, Johnny, 1937.70 settlement looks like a little support's been holding here on my 15-minute candlesticks. And what do you think about that?
Well, this is the weekly. This is a pretty far out look here, and last week over 2,000 proved to be too expensive. We really haven't had any weekly closes above that level, and that includes last week, which finally brought in some sellers. And what am I looking at here? Medium time frame balance really seems to be the charge here. I mean, we look at the range over the last month. We're right in the middle of it. Market seems to be looking for new information. Take a look at the daily. So, here's that 2,000 level. It really just one day, it looks like it closed up above that level. We're seeing rejection. Do we have kind of a head and shoulders formation here? If we have had a head and shoulders, I think we completed the head and shoulders play last week. Last week's low, 1936.90. We still haven't taken that out this week. Looking a little bit range bound. Here's the 30-minute chart. Overnight inventory, nothing really to speak of. The profile on Friday had a weak high and a late spike to the downside. So it's a kind of a normal variation day to the downside, but we did put in a late spike. The 12:30 close came in here at 1937.70 after a range extension. Market really kind of closes after that. There was no real continuation below that. But, we've opened, it looks like, in the late spike. So that is a higher probability of acceptance of lower pricing. If we can take out last week's lower settlement with any meaningful participation, I could look for a continuation to the downside. Because again, do we have any overnight inventory? Maybe a little bit short, but nothing really that's big enough for me to really depend on for any early opportunities here in gold. So watch last week's low. If we do find meaningful participation, I would look for a continuation to the downside, because again, we did open in the late spike, the base of that late spike, 1940.60. So right up here, we did open in the late spike. And we seem to be rejecting value from yesterday as we speak. So looking possibly for a continuation to the downside here. And watch that dollar. The dollar was actually a little bit higher this morning, 105.91. If that dollar continues to move higher, that's going to probably continue to put some selling pressure on gold. So, and of course, we'll be watching that during fast markets today, and we'll see what we've got to find. As always, take your deep breath. Be humble, grateful, creative, and centered in your trading today. And let's have a good trading day. What do you think?
I'm all for that. I'm in. I'm all in. I'm all in for that. I'm betting the farm that we do. We've got Deeyana going to join us here pretty soon in Fast Market. Also, for power players, we got Isaac Suffren. We will have our top quiz with Jack and Bonnie. And Johnny, you got group coaching today, don't you now?
Yes. Yep, I sure do.
Now.
Yeah, I got a couple of really good emailed in questions as usual. We'll start with those, and we'll see where the session takes us.
All right. A lot of beautiful people in our chat room. Thanks for joining us, folks. We got a lot going on today. We're going to take just a few minutes, and Deeyana is in the green room. We'll have our intern go get her. So stick around. All right, boys and girls, look who we've got. Deeyana, good morning, good afternoon, good evening. How are you?
I'm all right. Yeah, pretty good. And you guys?
Alive and kicking over here.
Good.
Right.
Good. I'm ready to go.
Ready to go? Well, let's get our ponies in the gate. We got inside a minute. And we're going to take a look at some of the markets here. So if you got some ideas in chat, let us know. Entries,
well, it looks
exits.
quite uninteresting at the moment.
And crude.
Yeah. It's an inside day. And yeah, the volumes are split as well between the two contracts. So that's never really a good sign.
Rollover.
I know, yeah, rollover. Yeah, but it started early this month.
And we're off.
All right, so here's the S&Ps. I've already resigned myself to taking the opening range trade, so let's see what happens.
Okay. Yep.
Got a 2.5 point opening range so far in the S&Ps. Let's trade.
All right. Let's see what Monday brings us.
Yep.
Gold traders, we've hit that settlement like 4 out of 7 times on my 15-minute candlestick. We are testing that 1937.70, so I'd like to see what happens there.
You're talking gold, Eddie, right?
Gold, yes, gold.
All right, I want to see what the tilt looks like. Tilt is the aggregated position of everybody in the trading combine and the XFA accounts. These are people that care about these positions, so we're about even here. All right, opening range is finished, so we're going to go.
If you aren't interested in that tilt, it is the top. There's the scrolling banner. It's the top line. It's going to give you the market. It's going to give you the average entry price and the percentage, short or long.
So you're wondering why I'm aggressively attacking, if you will, the opening range trade. It's because of the late spike that we put in on Friday.
Yeah, that was pretty relentless.
Yeah, do you remember me telling everybody on Friday, do not fight the late Friday rally?
I do remember, yeah. I didn't get involved in that. I just went and walked my dogs and
see, there you go.
So Fridays can be hit and miss, but they do have a higher probability of bringing a trending day. So that's probably because of the positions being, settled into the weekend, because a lot of the traders don't want to go into the weekend with massive positions. So even when I worked for one of the prop firms, they asked us if we were going to carry over a position overnight to only be a third of the size of what we were doing throughout the intraday session. And that's probably because the overnight margins are so much bigger, right?
Yep. Yeah, you've got to put up 10 grand a contract if you're going to hold it overnight.
Yeah, exactly. And we weren't just trading, equity indices. Some people were trading some slightly odd instruments as well, like exotics and stuff. So obviously those come with a ridiculously large margin.
So we did take out the low of the opening range in the S&Ps by 1 tick. That is where I am short.
Okay, cool. Let's see what happens. There's quite a lot of irregular structure to take care of lower down.
What
14.75 is the price.
Hey, just a reminder, boys and girls, we did have that Veterans Day discount. Did you check your email on Saturday? You have until 11:59 p.m. Central Time tonight to use that code. All right.
Yep. I posted that on my Twitter as well. So
did you know?
Yes, with a little cartoon.
Oh, what was the cartoon?
It was obviously an officer with a new junior, and he's going, "Can I just follow you on Twitter instead?"
Nice. So you can get that 50K new 50K combine for $11. $11. That's it. $11. $11.
If you can't afford that, then
right.
I know.
Right? That was really nice. I think a lot of people really took advantage of that.
I think so. Yeah. I mean, it's definitely an amazing opportunity.
Why not?
Good morning, Sarah. Already had a couple of people mentioning they've already succeeded in the trading combine here so early on a Monday.
Beautiful.
Good job, guys. Yeah.
You pass that combine, let us know. If we see it, we will shout you out in a good way. In a good way, yes. Well, Johnny, that I tell you, that settlement in gold worked out pretty decent for some support. We're trading off it right now. 1939.80.
70% short in the S&Ps right now. That's getting a little bit heavy there. But right now they're getting paid. The opening range remains the high of the day. NASDAQ actually took out both ends of the opening range, but so far we've got things going on like Donkey Kong here in the S&P. So, and I gotta. And there were so many good opening range trades last week that I got into and then kind of cut early, just taking profits. And so I'm going to be looking for a bigger profit on this particular trade because of the late spike. I mean, we opened in range and in value, but there was no real balance on Friday. So opening below that late spike, marks possible acceptance of lower pricing. So we're going to stick with this one for a little while. I would like to get it down to 4,400 and then see what the market looks like down there.
So we have the overnight low to get through first. If
yes,
we do that and closes below that, then we have some space.
Yeah, that overnight low, 1350, 1350 looks like.
Mm-hmm.
Congratulations, Push Pendra. Passed the combine, signed the XFA. Good job.
I'm sorry, 440850. 0850 is the overnight low.
Yeah, that's what I've got. Right, crude oil. So on the daily chart, we do have some kind of a reversal here. If you want to call it a morning star reversal as it's known. 3-candle pattern. We'll see whether that brings a continuation to the upside. The open sentiment for me is not really saying much because we opened inside value. And do we have the inventories today? Because I couldn't see that anywhere. I don't think they're releasing it.
It was on one of the calendars I saw on Friday. It is not on the calendar today. Right now, it looks like it's back and on Wednesday at its usual time.
Yeah. So we don't have.
We got robot. Who's a robot? We got robot voice here.
Deanna, would you mind just
Robot voice.
coming back? I think you have been claimed.
Beady,
by
beady,
the
beady,
robot
beady,
voice.
beady, beady.
Okay.
A buck. My goodness. Robots on Monday.
We talked about the poor high or the weak high that we put in here on Friday. That is likely a visual target to the upside. So we'll see if that happens. I'll mention that to Deanna when she comes back in.
Any better?
There she is.
And she's back.
1 2 1 2.
1 2 1 2. You should be good now, Deanna.
That's
Is
because
she
I
good,
am a
folks?
robot.
Let us know.
That's
You
because
are
I am
a
a
robot. Very data driven. Very data driven.
Very data driven, yes.
You want to turn down your mic just a tad, Deanna.
Yeah, sure.
All right. Sounds good now. Thank you, folks.
So D, I was just going to kind of point out, we just took out the weak high that we put in on Friday.
Yeah.
And this might be an interesting level or opportunity here.
Yeah, we'll see. I'm not going to rush this.
No, don't rush.
In a 30-minute time frame because crude oil can be a little bit bouncy during the initial balance, up, down, up, down. And I'm not a scalper, so I look for nice big extended moves that I can easily read.
You can get your teeth into.
Yes, my robotic teeth into. Yeah. And I also want to see what's going to happen around the fixed daily range, which is 78.08 in the December contract on crude. Because on quieter days, that can sometimes be a reversal point. So I don't really want to get caught up trying to do a rejection of value. We're going higher. And then,
What was that level again in crude?
It's 78.08, 78.10, let's say.
Okay.
Round
nothing's finite, right?
No, exactly.
What do you have in the S&Ps for that for those levels?
Yeah. So on the downside in the S&Ps, I've got 43.97.75. So that's the fixed daily range low. If we manage to go below that, let me just find my session range. Okay, so the average daily range, which is the entire 24 hours, is even lower than that. So that's 43.79.15. But the session range, I'm just going to have to change the time frame because we've just opened. Oh, well, right now is actually at the same level, but that's because the market is not, it's not really moved massively anywhere. So as the day goes by, that average session range low might actually move, because it is a dynamic measure. So until one side gets hit, it will keep kind of subtracting the low of the day or the low of the session from that average session range. So until that gets hit, it still moves around. So we'll see what happens. Yeah, but for now they're at the same level. So you have a couple of points there that we need to get through. And obviously looking at the auction. So if we at some point manage to hold below the initial balance range, that will be a little bit more confidence that it's going to go lower.
What about upside?
Upside, I have the high of the Friday session, obviously, so that's 44.35, 50. Yeah, somewhere around there. And then the fixed daily range is 44.44. That's a nice number.
Fall.
Yes, exactly.
44.
Yeah. And then higher up, I have the average daily range, so the full 24-hour at 44.54.
It's going up in 10-point increments.
Well, it takes in the last 10 days of the range and then calculates wherever that's going to fall. Now, the fixed daily range uses GMT midnight as a starting point and then halves the average daily range number and puts half to the top and half to the bottom. So if we have a quieter day, usually the full average daily or average session ranges don't quite get reached, which is why it's a good reversal area.
Got it. Right.
But again, you have to match it with the type of a day you're seeing. And then the session range at the moment, so average session range high exhaustion point, let's call it that, is at 44.38.50.
Exhaustion.
Yeah. So it's slightly lower than that. And again, depending on how the price behaves around it, you can read the volatility of the day. So if it gets ignored or if there's a muted reaction, it means we may have a higher volatility day. It's also really relevant when those levels get reached. So if they get reached really quickly, very early in the session, that slightly reduces the odds of it acting as a reversal area for either one of those levels.
All right. Thank you.
Hey, real quick here, Dagan's asking about trading psychology. We do have those videos in our YouTube, and also this Wednesday, we're going to have Power Players. Johnny's going to be with Jared Tendler. So that'll be a live session. And stick around tomorrow. Who's going to be joining the team here on Fast Markets is Trades by Matt. So we're going to have a full house here. And yes, and we're not talking the Olsen twins. We're talking Trades by Matt.
We did that panel with Trades by Matt. There's a couple of years ago, I think. Remember that, Hogue?
I'm sorry?
We had a panel with you, me, Dan, Trades by Matt, and Tim Brissett.
Oh, yeah.
Yeah, that was a couple of years ago. That's pretty fun.
God, it seems like years and years ago.
Yeah, well, it was 2 years ago.
It's just going so fast. I can't believe we're already heading into 2024.
I know. A year has gone by. My puppies are going to be 2 years old at the end of this month.
Oh my goodness.
It's like, how did that happen?
The terrible twos.
Yeah.
How old's Lacey, John?
Lacey's 4.
Okay. All right. I
remember still a youngster.
Yeah, she's still got a lot of energy. She's a little bit heavy, so we're trying to feed her a little bit less. But tell that to my wife, who's giving her food off the table all the time.
Yeah, ours are a strict, measured diet and stuff. So yeah, but a couple of them are pretty skinny naturally. Like however much they eat, they're still so skinny. And one of them is their father, who is King Charles Cavalier. But that's good for his heart. So
sure,
you don't want to be super heavy. So yeah.
Yeah, I went to the doctor on Friday.
Oh,
just had kind of a checkup. I lost a bunch of weight. The doctor
that's good.
Jumping up and down, so he was happy about that.
That's amazing. Well done.
He had a bet. With one of the nurses.
Yeah.
Yes.
Yeah, I get a lot of exercise sitting here in this chair.
Same. Yeah.
Did you put a matchbook under the scale or something, Hogue, or what happened?
Well, no, I took my jacket off.
Oh,
and swallowed some
You
helium.
took your
That
cardigan
works.
off.
If you swallow helium, that works also.
I walked in and the nurse, who was a guy, was like, all right, step on the scale and let's see, see how we're doing. And I said, sorry, I don't step on scales. He's like, really? I mean, you don't have to. I said, no, I'm just kidding. Step on the scale. So it was actually good news. So that's good.
All right.
Yeah, my mom was actually watching some of Topstep TV, and she's always worried that I've lost weight, even though I'm not. I'm slim, but I'm not exactly skinny. So I worked on getting a few pounds off myself, and she was like, "You look like you've lost weight. What's happened? Are you okay?" I was like, "Jesus, Mom."
Sounds like an Italian mom. Look
Yeah,
at you.
typical.
You're not
Typical
eating.
mom. You're not eating. What's happening? And I do eat. I do eat throughout the day. It's just I don't like eating first thing in the morning. So I typically do I suppose you can call it an intermittent fast. I just have coffees and teas and stuff. And then typically when we finish this, I will have my first meal, and then I will just keep eating until I go to bed, which is great.
Nice.
Well, that probably helps your metabolism. You're supposed to eat a little bit all day long,
Yeah.
As long as you're not eating, 6 full meals all day long.
Yeah, it depends on the day.
Yeah, usually when at some point here, I'll grab a protein shake, and that'll be my morning and probably afternoon meal, and then we'll eat a sensible dinner, and then it seems to be helping. So that's good.
It's working. Yeah, more protein makes you feel more full, and obviously it's generally low fat. So yeah, it's all good. I'm actually on a keto diet long term.
Really?
Yeah. I've been pretty much 70% of the time keto since 2016.
Oh, yeah.
How do you live without potato
bread and pasta?
So potato, not much of a problem. I actually, I'm not good on potatoes. I have some food intolerance to it. Bizarrely, bread is difficult, and pasta as well, because I do love my bread and pasta. Oh my god, and pizzas. Pizzas are not that difficult because I have these low carb tortillas. So they kind of serve as a thin pizza base. So I just put my own stuff on there. That's good. But pure bread, like baguettes and stuff, I do miss that. So every so often I will get off keto and then just go crazy for about 3 days.
So you go to Olive Garden and just go nutso.
No,
bring the bread, bring the pasta, bring the bread.
I buy stuff. If I'm out, you don't want to see all the stuff that I order.
Manja.
Yes, manja.
So,
hey, if Deeyana, if your mom is listening, let's give a shout out to her mom. Everybody in chat, say hello to Deeyana's mom if she's
say
watching.
hi to my mom. Yeah.
If moms are watching, that's cool. Hi, Mom. That's nice. She's checking up on you any way she can.
She's always checking up on me. I'm almost 43. And she's like, what's happening? Oh. Typical mom.
Typical. All right.
We seem to be having a little trouble getting through that overnight low here in the S&P.
Yeah. Let's wait and see what happens in about 10 minutes after this TPO period is over, if you're willing to hold it that far.
I got a question here from Rodrigo.
Yeah.
Rodrigo has a question. Coaches, I have a question, and the initial balance is counted from 9:30 through 10:30 a.m., or is that 8:30 through 9:30?
It depends on your time frame, on your time zone.
On your product as well.
Right now here, Central Time, we're 8:49 a.m. New York right now is 9:49 a.m., so they were an hour ahead of us.
Yeah, so in Central Time, for the equities, the initial balance is 8:30 to 9:30. Eastern Time, 9:30 to 10:30.
Yeah. And then crude oil and gold, they have different opening times. So if we're talking Eastern, crude oil opens at 9 and its initial balance ends at 10.
There you go. I hope that answered your question.
What do we have? We got nothing coming out here at 9.
No.
We're just hanging around.
Okay, crude oil is about to touch that fixed daily range. So we'll see what happens there. So far, the range of the initial balance is not massive, so that's good. If it gets massive, that's going to be more likely to give us the rest of the day in responsive activity, meaning pretty quiet, potentially failed auctions and stuff. But if we kind of stick inside this range, anything can happen. So again, patience is very, very important here.
Mm-hmm.
Well, in gold, we surpassed that 1937. We're down to 1937.20, so we did run through that. How far we go is the question.
So
yeah, it's got space. It's got space. It's gold is rejected its weekly supply with a pretty big jump. So now it's got space on that really massive time frame. If we're just talking a weekly strategy in general, it actually has space all the way down to 1865.
1865. That's a long way.
That's a weekly outlook, obviously.
Civil War days.
So that level that Dee was talking about, that average daily range, 78.08 or 78.10, as she mentioned, we are getting close to that level.
Yeah.
Now we can take a look at that gold here. Yeah, so we were kind of talking about the idea. I mean, this was a late spike. We opened in the late spike. That's acceptance of lower pricing. I want to see price get down below last week's low settlement and maintain some time down there. And then, of course, we, as Dee says, lots of space down there.
Have a look at the weekly chart. You'll see what I mean.
There it is.
Yeah, so you see where the jump came from? That's his previous supply, because we kind of consolidated around there. And now go up to the upside. So look at the top.
Here?
Yeah, so all the way to the top. Literally.
Supply. I'm thinking demand.
Yeah,
supply. There
that's
it is.
right. Yeah, so supply. There it is. So yeah, I see the big jump. That literally comes from the previous sell-off area. So now we're seeing exactly the same thing. And that could continue all the way down to where the previous buyers came.
Mm-hmm. So there's your 1865.
Mm-hmm.
Nice call.
And even though we're intraday traders, knowing where the moves are coming from, it's very important because otherwise you kind of start getting stuck in those low time frames, and then you start going, oh, what happened?
Right.
And this way you kind of avoid that what is going on moment. And you go, okay, so that was the previous supply, that was the previous demand. Okay, cool. So now we've rejected the supply. Of course, that's logical, right? And that should help you with your decision-making process. So now if you see a sustained auction to the downside, as long as there's still some average ranges left over on the day, you can take it with a bit more confidence. Obviously, if it's a huge jump lower, sometimes that can cause a pullback. So even that, you can be right on direction, but wrong on the trade location.
On the timing and the location, right?
Absolutely, yeah.
Dee, how many people that you talk to and that you work with?
Oh gosh.
Ask you why are you focusing on such long time frame charts?
Yeah, when they first come into the Market Focus program, I do get a lot of those questions because I start my first part of the program explaining the supply and demand concept and those large timeframes, and also how to look at the profit margins, basically how much space do we have until we hit the next opposing area. And that's done through a multi-time frame analysis. So each time frame we analyze separately, and then once we get to those lower time frames, then we go to market profile, maybe even volume profile in some cases, especially if we have like a trending day. But generally, you can't just apply the same principles to every single time frame because lower time frames have a lot more noise, so they will look a little bit different. And so yeah, you have to be quite attuned to what you're looking at on 30 minutes, 5 minutes. It's not the same as taking all of that information from a large time frame and using exactly the same principle on like a 2-minute chart, because that's never going to work.
Right. Yeah.
Watch this NASDAQ. NASDAQ got really heavy here.
It's like if you don't know the context of the longer time frame, you can put yourself in some really bad situations in the short time frame.
Yeah, and then you just overtrade. You start hopping in and out of trades. That's why I call people grasshoppers. Like stop doing that. Zoom out and let's have a look at what's going on larger time frames.
Yeah, so the NASDAQ took out the overnight low pretty readily. Now we've taken it out in the S&Ps as well.
Yeah, I'm looking at it. So we got 4 minutes until the TPO closes. Back in the day when you guys used to have the radio squawk.
Yeah.
I used to show my charts, and then I have my candle timer even back then. So at one point I was looking at the weekly chart, and it said, I don't know, like 5 million hours, 9,000 seconds until candle close.
It was Monday.
And I remember Hogue was like, yes, that's a long time frame. Like 5,000.
Still running.
Yeah, it's still running. Yeah. So now we have an orientation point in ES. So we took out the overnight high. And now depending on how the price behaves after it takes out the high, does it close below it or above it? That can give you extra confidence to either stay in a trade or to cut it. So it's a systematic way. Right? The overnight low, yeah.
Right. Okay. Yeah. We'll see what happens here.
So we just breathe, meditate, take it slow.
Yeah. I'm good. I'm chill right now, so we'll see what happens.
Mm-hmm.
And what's the tilt? Still short, 69%, 72%. We're getting shorter and shorter down here.
Yeah.
That makes me nervous.
Well, no, maybe they're listening to the show. So everybody
it could be. Yeah. Could be.
Don't be nervous, Hope. Just stick to the TPOs and where it closes. Yeah, exactly.
Stick to the plan.
You have your orientation point. You know what you want to see. You know what you don't want to see. So just stick to that. So now I'm going to be the beacon of light for you, because you were the beacon of light on so many of my bad days when I would be like, oh my God. And he's like, go, run. It's okay. Don't worry about it.
Well, I appreciate that, Dee. I appreciate that.
And I was watching a movie over the weekend. It was with Fassbender, and he kept saying, stick to the plan, anticipate, don't improvise. And I was like, wow, that's something I can use on the broadcast.
Yeah.
So maybe you saw it. It's he's an assassin. And basically the thing is, you don't want to screw up being an assassin. So stick to the plan, anticipate, don't improvise.
You certainly don't want to mess up as an assassin.
No.
Yeah.
No, you don't. It was a good movie. Good movie. I recommend it.
What was it?
It's called Killer. Very good movie. Usually I'm like fast forwarding, on parts I don't like, but this one I was like rewinding. What did you say? What did you just do?
Well, it's a David Fincher movie.
Is it?
Yeah.
Very good movie. Yeah.
7, Zodiac. And
oh, yeah, that's right. Yeah.
Fight Club.
Oh, really?
Yeah.
Oh.
Oh, James has said, don't forget about The Social Network. That's a big one. He filmed the first scene of that movie 99 times.
Oh, my goodness, really?
Wow.
Yeah, he's a known perfectionist, so maybe there's something to learn there.
I don't know. He hit it. He got my attention. He did. Where does Dee live? She's across the pond in the UK.
Yeah, London at the moment, southwest London.
Right.
I've been here not exactly in this area. In this area, I've been for 18 years. Before then, I was in northwest London, because that's where one of my universities was. And then I moved here. So, yeah, long time.
So you moved there when you were 6?
Of course.
All by yourself. You just packed up a bag and said, I'm out of here.
Yeah.
You ever do that? Ever run away from home, John, when you were little? I did it once. I did it
once as well.
Yeah.
When I was 12.
My mom even packed me a lunch. She says, there you go. There's the door. Don't let it hit you.
Yeah.
Or the good Lord split you. What?
All right, so TPOs, eh? You ran away a lot.
Not till I was a teenager.
There was no circus, no local circus to join.
No,
And
right?
that was my gig.
So you were in a CD?
Yeah, so the TPOs didn't close below the overnight low.
Right.
So now it's down to you whether you want to keep holding.
Well, I was listening to Hoogard's book, Best Loser Wins, so I'm going to stick with this for a little bit.
Okay.
I've been all right taking losses, and I'm okay taking losses. It's a matter of time till I hit something good.
Mm-hmm.
We do have a little bit of a delta divergence in the S&Ps, not in the NASDAQ, but we're positive 1,000 delta on, a market that is attempting to move lower.
Mm-hmm.
So we'll see what happens here. What do you think? Do you think I'm crazy for holding this now?
No. So it's just I just work on a binary process. So if the market doesn't do what I wanted it to do around my orientation point, I just cut it and I don't think about it. If it does do what I expect it to do, which is to hold below the overnight low as a continuation signal, then obviously I will keep holding. But yeah, obviously you can use whatever you want. So yeah, there's a lot of structure that needs to be repaired lower down. So there is some merit to that.
A lot of it.
Yeah. It's just that Mondays, they might be a bit jumpy. We have a huge value area from Friday. So that's a little bit unreliable for any kind of open sentiment readout. So yeah, I would be taking a little bit of a cushion. And then maybe trying again when the market looks a little bit clearer.
I should have probably done two, taken one off, let the other one fly.
Yeah. That would be a nice alternative.
Are you, Della? Was there any report at 9? We had nothing top of the hour here, but we do have our Top Step news flash. Jack, you got the first news pack for us here today?
Yes, indeed. We can do a little roundup of the ongoing things, starting with a little information about stocks and bond returns.
Yeah.
So since the peak in January 2022, the index return for S&P 500 is negative total returns from now. No shocker, but not nearly as bad as bonds. So something that we could look at maybe converging. We'll see. There's a lot. This market's still expensive. It's still expensive.
It's always expensive. People have been saying it's too expensive since I started trading it in 2013.
Oh yeah. Oh, for sure. It'll always run you over in the long term, but
yeah.
No, I'm with you on that one.
It's like, how much higher can it go? And then it goes higher.
And then just some weekend items. These are more observations than news. I've noticed a lot. Have you seen all the real estate hustle bros on Twitter? They're like 99% of the platform, but they do this thing a lot where they chide you for doing anything on the weekend besides making financial gains. So guys, take the weekends off.
Yeah, exactly.
And we got one more in honor of Veterans Day. This was interesting. Now, this is the right sentiment here. It's cute. It's Sesame Street. Rosalita is thanking her dad for its service, but this person points out that they can't stop thinking about the idea of a Muppet going to war, which
yeah, that would be something.
I mean, it'd be pretty terrifying if you were lined up against a Muppet. I mean, that's
right.
Psychological warfare right there.
Yeah.
I guess you'd call that hand-to-hand combat, right?
Yeah, something like that.
That's funny.
And that's all I got for now.
I like the Muppets.
Oh,
Me
yeah,
too.
You name check them all the time, Deanna.
I do, yeah. I always mention the Muppets. And also in London, when you say, oh, what a Muppet, that's kind of like, oh, what an idiot, in sort of a colloquial terms. But yeah, it's such a good explanation of whenever you have like a bad trading day, oh, you're not an idiot, you're just being a bit of a Muppet.
Right.
There you go.
Right. Yeah. You call traders making iffy decisions Muppets.
Yes, exactly. So I had a Muppet moment.
Muppet moment. So some questions as to where my target is for this trade if it goes. I'm looking at 4,400, the big fat round number. But you got those moving averages down there at 43.95. 97 is one of Deeyana's numbers. So that looks like a good target if it doesn't end up going that way. I can't really do anything else because as a general rule, if the opening range is the high of the session, I'm only looking for shorts, and I'm already short in a good trade location if it does keep going. So we're going to just let this play out, I guess, and see what happens. At least we've got something going on here, huh?
Yeah, I call that the do or die approach. Stop loss or target, nothing in between.
Well, gold's making a nice effort here. We tagged below that settlement, but didn't last there too long. This sort of play here at 1939.5. So I haven't put on the trade. Don't think I'm gonna here, but just watching this gold here. Crude's making a nice run here. New high.
Gold, Eddie, we talked about. We need meaningful participation below last week's low. We didn't get it. Here's your crude. Yep. No, we're back to entry in the S&Ps here.
I still don't have a trade in crude oil, so I'm just waiting.
Nothing yet, right?
Yeah.
Think I should sell another S&P?
I don't like that tells you everything. I don't like adding in, especially if it's going to give you a worse entry price as an average. So I would just stick with what you've got.
I know you're eyeing the fact that first 30-minute bar did not close below the overnight low. Yeah. That's bothering me too.
Somewhere,
yeah, if anything, I would clip one rather than add another one.
Somewhere in Mexico, MP just got a chill. to not add.
Yeah.
Dave points out in the chat, by the way, Hogue, it's too early in the week to think about this, but 4,400 is the max pain point for OPEX on Friday.
Got it.
Those big fat round numbers.
Mm-hmm. Yeah, I don't know if she's here, but Anne-Marie and I are going to be chatting later, and we're going to get her on here to talk about how those big fat round strikes in options can give us some clues here.
Well, in gold, you actually have Forex option expiries every single day around 10 a.m. New York. It's called the New York cut. So basically, crude oil and gold, they're Forex-linked instruments. So because of that connection, whenever there's a larger option expiry in Australian dollar, because Australia is closely connected to gold, because they're the largest gold exporters, one of the largest gold exporters in the world, every time you have a large option expiry, that can bring a turnaround in gold as well. So that's something to keep an eye on. Not like obsessively, just go, well, where does it expire? But it definitely has a huge effect, because there's so much volume that gets pushed when the options are exercised. Obviously, that has a huge effect, but the option has to be pretty sizable for that to happen.
By option, you mean the strike price, right?
Yeah, strike price, yeah.
Yeah, it's got to have some pretty good open interest in it.
Yeah.
So somebody did point out, in the NASDAQ, we did close below the overnight low on that bar. But we're trading S&Ps.
Yeah.
Well, keep your eyes open here.
I feel like if I stare at it intently enough, it'll move.
Yes, I've had those moments too. Come on, come on.
You can do it.
Max says, add 2 more, Hogue. Do it for the stream. For real, don't do it.
Yeah. My God, you can do so much damage with 4.
Oh, yeah. Yeah, we're just still here. Positive delta about 1,000.
Does anybody out there not talk to their trades?
Not talk through their trades?
Talk to their trades.
Oh.
I like talk through though. Like your language, Hogue's love language is S&P charts.
It's love language.
Yeah.
You're the love guru.
I mean, I try not to talk to them. I try not to cheer for them. I just try and kind of remain centered and don't get too excited about the wins. Don't get too upset about the losses and look for the next opportunity,
Yeah, and again, when you move to the more data-driven process, all of that gets much easier because you're no longer looking at the trade from your emotional lens, but you're actually using data, and then you just categorize them either in the higher probability trade, which was expected, or the lower probability trade, which wasn't expected but can still happen. And that way, emotions just never really come into it. And as long as you're not trading with huge size that is completely disproportionate with to the size of the account or the risk that you're allowed, then you should be much better. So, I mean, a loss shouldn't really make a massive dent in your account balance.
Oh, no.
It should be acceptable. It's not so tiny that it doesn't make any dent, but it should be large enough to matter, but not so large to completely derail everything. Because then you do get emotional. However you spin it, it can be a data-driven process. But if you're using like quarter of your daily loss limit on one position, that's going to make your heart jump a bit.
Right. And that's okay for me because if I go 3 straight losses, I'm done anyway.
Exactly, and you can stop. But a lot of other people, they can't stop. So they do 1 loss, 2nd loss, 3rd loss, 15 loss, 20 loss, and then before you know it, they're heading for a reset. We don't want that.
No. And I can sit here and act like I'm perfect. I'm not. Sometimes I get tempted into doing one more later on, and then if that one is a loss, then I'm done for sure.
Yeah.
That rally on Friday, I just sat here thinking, man, I hope nobody's selling into this.
Yeah, I mean, I looked at it, and because there was excess on the profile, there was a C-period buying tail, and when that happens, there is about a 10% chance of having those asymmetrical trending days, as I like to call them, because once the business fails on one end, it's not 100% obviously, but it can be a guide. So if you see that, and then it goes into single prints on the other side, typically that tends to turn into a massive day. So usually I'm just like, I don't know where to enter. There was no pullbacks. So there was no opportunity to use like a low volume node or something as a trade location. It was just like up and up and up. And I just let it go. And I did look at it over the course of the day. And I just went, yep, S&P.
Yep. And I was looking for an opportunity down here. I think somewhere near the Thursday settlement to look for an opportunity for a long. Just didn't get there.
No.
Just didn't get there.
Well, folks, we are 74 minutes in and only 438 likes. Cry me a river here. If you like what's going on, come on, 1,800 of you, 1,800 Cuervo of you. Hit that like button, kick that like button, smash it, poke it.
Remember, it's
whatever
lucky.
you need to do. It's up
It
there.
is lucky. Yeah.
And look,
I gotta click it because I need the luck.
We all need the luck. And subscribe. Don't forget to subscribe. We like that. We've got 41,005 something. So we are putting up a nice number here for our subscribers. Remember, we're looking for that 50K number.
Yes,
All
50K.
right, so back to the opening range.
50K. Isn't that right, Snoop?
I'm hooking up with Eddie and Puff the Magic Dragon. Gonna make a trade. Gonna see who's the leader and who's the lagging. Snoop out.
All right, who is the leader? Who is the lagger here, Johnny? What would you say, as Andre would ask me?
Well, I mean, you got the NASDAQ, which really kind of closed below that overnight low, and the S&P is the opening range is the high. And I would say the NASDAQ, because I mean it's already kind of accepted below the overnight low.
All right. Congratulations, Mark. Mark passing the 50K combine today. Good job, Mark. Way to go.
Oh. Time will tell, won't it, Eddie? Which one was the leader? Which one's the laggard?
Time will tell. Well,
that
they sort of both came off. I mean, I couldn't tell this morning. Maybe
Just
it's the Dow.
That whole rally on Friday was emotional. Volume was off a little bit from Thursday's volume. And it doesn't surprise me on up days. We did add some open interest, like 11,000. But who's buying it up there? Is it longer a time frame, or are those laggard speculative longs? I mean, who's buying it like that coming into the weekend?
Yeah. I got a question for you. Troy Simon, first-time listener, first-time caller. I'm a long-time listener, first-time caller here. You guys have any thoughts on how to scale into a trade, adding to a position, or do you just go all in, all out? Scaling in.
I don't like scaling in until you have hard data that scaling in would be beneficial for you. And if you're still trading smallish accounts, anytime you scale in, you're doubling the position size. So until that changes and until you have, a lot of buying power, I would stick away from that. The only time I would say it's beneficial to scale in is if a trader genuinely has a problem with every trade going into a drawdown and a lot of drawdown. So if let's say you're using 30 ticks for a stop loss, every trade goes to like 25 ticks a drawdown. So obviously that's a problem with the entry, the way you're looking at it, timing it. And if that's the case, I would first look at the trade location and how to maybe improve that by looking at your maximum adverse excursion number in the journaling software that you're presumably using. And if you're not, you need to start. So I just go my full position. And I mean, every so often, I do trade some pretty sizable accounts, although that varies because it depends on what kind of project I have, whether I'm buying a new house or whatever. But, when I'm trading with size, when I'm trading like 20 lots, 30 lots, I will scale into that, but for an entirely different reason, because you simply cannot execute during most times. You can't just whack in a 20 lot position in crude oil and expect that all of it is going to go in. So you have to partial it, but that's an entirely, different reason. It's not like, to get a better average price. No, it's just to make sure that your full position goes in. But for anybody else who doesn't have that issue, if you're just looking for your consistent profitability, you're not there yet, you're still on that journey, just use a single position size until you have data. Once you have data, maybe if you have some setups that clearly work a lot better than some of the other setups, you can maybe up the position size on those. But still, you would have to have a pretty sizable account to be able to do that, so that trade is not double the size. So when that loses, it causes a lot of trouble, versus the others that might have not worked out, but those work out, and then it doesn't actually bring you much profits. So I'm really against the whole scaling in unless it's backed by data.
I would agree with that, but there's certain situations and where I would probably look to trade larger. And so like Dee says, you're probably going to piece it in. So maybe some of the entries will be better or worse than your average price, but I would. There's a thin line between using a zone to accumulate an inventory and adding to losing positions. Yeah.
Which is what most people do. Like you what do you call that trade? The moron trade?
Moron trade, right?
What is it, John?
If the market goes against you, you put more on.
It gets me every time, that the moron trade.
Yeah, and
so don't do moron trades. That's what we're trying to do.
If you do it and you get paid, then you're going to think it's what you do every time. And it's just not the case.
And that leads to a bad trading habit, because then you're chasing what worked once once in a blue moon, and you're expecting it all the time. And then you cause so much damage to your account balance. And before you know it, you're like really frustrated and you don't know why that's happening. So just don't do it. Like I'm not really in favor of averaging in until you get to a point where you are trading multiple contracts. Then you can average in to like however you wish. Do whatever you want. Yeah. But even that, obviously when I have to trade like that, I have, like you said, John, a zone where I want to accumulate my position, right? So it's not, let's just randomly just whack in a trade just because. It's always a thought out process.
Yes. Like this zone right here, and everything is a zone. There's no like finite level that is going to hold. So everything we're looking at is a zone. And if you're trying to accumulate a position, work the zone.
Yep, always. Yeah, so whatever price point that we say, that's always it basically implies that you're looking at an area from there and above. So it's never going to be an exact science. Mm-hmm. But it does have to work out within a particular number of ticks. So if let's say you're using, I don't know, let's say 20 ticks on a trade, if the whole zone gets smashed through, obviously that's not going to be good, because the whole area where you wanted to become a buyer or a seller is broken now. So you have to go back and actually see whether your trade is valid still. And a lot of people are not very good at that. They just keep their bias and they don't have an alternative scenario what to do when the first trade that they wanted to take doesn't work out, which is why I always want to have about 3 or 4 scenarios before I even get into the trade. But for me, at this point, I don't necessarily have to write them down, because it's always the same thing for me. Right. So where is it opening? What are the TPOs doing? What's the time of day? And then I just work all of that into a systematic framework, and it's much easier for me. I don't know how people trade without that, to be honest.
Yeah. I call them hypotheses. You call them scenarios.
Yeah. But I call them hypotheses as well, but you can call them whatever you like.
Yeah,
it's basically
prepare for things. Mm-hmm. There's a question here I wanted your answer on also, Deeyana, is how do you feel about scaling out?
Well, scaling out is a little bit different. If you're shooting for, let's say, a 3R multiples trade, so you want to make 3 times what you initially risked. If your trade gets to about 2R multiples, there is merit in cutting it in half, because at that point you have a free trade, you have a paid trade, because you have no more risk, and then you can let the rest run either to 3R, 4R, 5R if you have a trending day. But keep in mind that trending days intraday are not high probability. They have anywhere from 20 up to 42% of probability of happening, depending on the product. And interestingly, crude oil and EPS float around 35 to 37% for trending days. So if you're constantly going to be chasing those, scaling out is not going to be the best. Why? Because you're going to scale out and then the market turns around completely and you're still looking at effectively 1 hour trade. And then we're running a very slippery slope of having a negative risk reward. So, people don't realize how sensitive intraday trading is for all of those little inconsistencies that people have. So they're like scaling in, scaling out. Is that like all of that work? If you just stayed in with one trade and then shoot for 1.5 to 2 hour multiples intraday, that's plenty. And you're going to get there much faster. You're going to reach targets and pass your combines much faster than somebody who's constantly dicking around, excuse my French, just scaling in and out and over managing the position and thereby hurting your performance. You don't want to hurt your performance. So if there's no real benefit to scaling in or out, just don't do it. You think the trade is not valid? Take it off. Take the profit, man.
That's the thing is, if you're, let's say you put 3 on and your goal is to get, 2 to 1 reward over risk on most of the trades that you take. Well, if you take that first one off at 1 hour, then you're going to have to look for a lot bigger profitability on the 2 other contracts or even the 1 other contract. Let's say you get 1 hour on one, 2 hour on the other. Well, if you get out of both of them there, then you're not reaching your 2R. It is that slippery slope that changes your reward over risk ratio over time, where you can run into trouble.
And a lot of people are obsessed with accuracy. However, if you maintain that moderate risk reward intraday that is statistically viable, so it's 1.3, 1.5, 1.7, 2R, like you get consistent 2Rs on intraday, you're going to be a very wealthy person.
Mm-hmm.
So, I really don't get why people are so obsessed with, let's just get in a little trade here and there. I do a lot less work for a lot more money and a lot less screen time than the grasshoppers that I like to call them. Because there's very few people who are scalpers that are doing that well. I'm not saying they're not there because I know a few and they're really excellent. Right. But for most people, these are not your normal individuals. They're people who already have very strong self-discipline naturally. They're typically people like we're talking about veterans, where they're typically ex-Marines, somebody who just isn't ruled by their emotions, and they're used to high pressure situations that are always poking in your fight or flight response, and yet they've learned how to control it. So that's directly transferable to the markets. So if you're not of that kind of background, it's going to be very difficult for you to stay out of the market when you mess something up and you see another setup coming to you. You should just stay out. So, all of this nonsense about, let's do high accuracy, and then all of that trading. And by the end of the month, you don't have a lot of profits to show for.
Right. And scalping is a tough business. I don't have the energy for it right now, so forget it.
I mean, I think when I was younger, like when I first got into prop trading, I did have more trades intraday that were, I suppose, opportunistic. But these days, I just can't be bothered.
Hey, while we got some time here, let's take a look at our success in hot streaks. James, you got hot streaks? We'll post up here. Take a look and see who we've got. Oh, look who's back on the board.
Yeah, there he is.
Yes.
Decided we're trading live now.
Yes.
And first day back, 15K. Nice.
Awesome.
Wow.
It was a good job.
That's the whole streak. We're combining the accounts here, but on November 10th, a day we'll remember for a long time, Massimiliano finally took trades in the live account.
Go down
a
in
small
history.
winner, but it was positive. There was a lot of pressure there. For the delay, sort of like Jordan coming back, but he did it. We lost GZ at 18 days.
We got Carlos.
Yeah,
right?
He's new to the list. He bumped off on a tiebreaker. I used the amount of profits. So Blake didn't trade, so he's still at 18. But Carlos, 18 days, a little over 7K on that streak.
Nice streaks.
All right, keep it going there, folks. Keep it going. Thanks, Jack. Those are funded hot streak.
All right, I'm going to try short in crude oil because they tried to poke above the initial balance just at my level. So far, it's not doing that great. And whenever the auction is not doing that great, I want to try and get involved. So I'm short right now from 77.86.
Right. Oh, I like it.
How many are you short there, Deanna?
Just one. It's Monday.
And my S&Ps is doing nothing. Back to losses.
Folks, if you're just logging in here, our chat, remember we've got Shoulder Tap with Mick in about an hour. Later on today, I will be talking to Isaac Suffren in Power Players. We got our top quiz, 11:45. Okay, that question comes up a lot with Jack and Bonnie. And today, high noon, with our infamous cowboy, Johnny Hogues.
Yes.
Johnny Hogues is going to be doing group coaching.
I love group coaching. It's like one of my favorite periods during the week is doing those group coaching.
There you go. So that's going to happen. And don't forget, tomorrow, going to be joining us traders, Trades by Matt. Going to be jumping in here. We're going to have Andre, MP, Hogue. Well, it's going to be a something new. We're going to miss you though, Deanna.
Yeah, I'll be back on
They're going to
Wednesday.
have no direction whatsoever. It's going to be it's going to be a clusterfoo of traders over there, but we'll find out. Trades by Matt going to be with us here, and then of course Wednesday, Deanna will join us again, and we'll have Jared Tendler, psychologist with Hogue, on Power Players.
Always
Jared is, yeah, same.
Yeah, and hopefully Andre's back tomorrow. He's feeling under the weather today.
Oh no.
So eat some soup, young man.
We'll figure it's a Monday.
I love soup.
What are you implying?
The cure all.
If he's listening, Andre, I hope you feel better, bro.
Yeah, take it easy.
It's his VIP at the Pink Monkey, I think.
Oh my.
Yeah.
Yeah, we'll leave
That'll
that
do it every time.
All right.
All right, you're sitting comfortable now.
Well, I'm not
Ish.
sure I'm comfortable.
Ish.
It's only a few ticks and profits.
Right.
It's just a start, but it's good that it didn't push straight into my half loss. So that's for now a good sign.
Well, I said all that time in profit. Now I'm sitting in loss.
Yeah.
I did say.
Yeah, you did. And I was thinking the same thing, but this opening range trade was so profitable last week. Yes, of course, the situation was a little bit different. But, the idea that we opened below the late spike was encouraging me to look for the short. The opening range being the high of the day was encouraging me to be short. NASDAQ, did close below that overnight low in that first bar. Of course, we're not trading the NASDAQ. So,
And it still may happen, just, maybe a bit later in the day. I find the initial balance. Yeah, that's the thing. I mean, an alternative way of looking at another short, looking for another short even, would be to maybe wait until the auction fails after the attempt to the upside. So that might bring you a better trade location and then an improved risk reward.
Well, I have to move my stop a little bit further away. Why? Because the opening range high is 19 quarter. If I'm at 19 half and there's a couple of stops there that get taken out and then the market turns, I'll be upset. So whenever we do the opening range trade, I always push the stop just a few ticks out, away from the other extreme of the opening range, because you can look back and see a lot of times the market will take it out just by a couple of ticks, and then it'll turn around and go the other way. So we'll see what happens.
Hey, John, Ben's
Yes,
got a question for you. How do you factor in the price action at this time? For example, choppy price action equals take profit quick.
Yeah. I mean, but we can take a look at the price action for the first half hour of the day, but that's pretty short time frame, right? I mean, let's take a look at like the 5 minute. All right, so here's the first half hour, 9 o'clock, chop. All right, now we're getting a move in the opposite direction, starting to look like it's heading to the upside. It's easy to kind of see that in hindsight, but do we really know what's going to happen? And with the rejection of the late spike from Friday, with the opening range of the high of the session, I thought it was a pretty good probability of potential continuation of the downside. It didn't happen, at least not yet. But we'll see. And, one of the nuances that I agree with what you're saying is, we opened in range and in value. Are we looking for big opportunities here? Maybe not.
Yeah. Jim Carlton comments here in YouTube chat. I know it's getting bad when I'm listening to Topstep TV while working in the yard.
Hey, I do that as well. When I'm not on, I always have it in my ear. I'm walking my dogs, and I have like headphones with earphones, and I'm just chuckling to myself like a lunatic. But yeah, I mean, I get it. It's really good.
We appreciate the comments, and thank you.
So,
T, do you have Deeyana? Do you have a target on your short?
If I can get, well, it depends. This is now potentially some responsive selling going on above the value area. And if it's a responsive day, I stick to just 35 ticks. So that would be 77.50 roughly. If I can get 77.33, I will be one happy bunny today.
There you go, John Jones. Okay.
a happy bunny.
A happy bunny. A happy Muppet. Yeah.
Let's see here.
Another question here. I guess that's how you pronounce it. I never quite hear y'all talk about gaps and percentage of time fills. Gaps are always no volume nodes, so they run through the resistance. Any thoughts on that?
I find that the low volume nodes are useful in a trending day, and they're actually areas where you can get into the directional move, not going through them more often than not. And the reason why I don't personally look at them is because I have a way of analyzing supply and demand, which is like swing extremes and how the price actually left the area. And to me, that gives me more information than just looking for pure volume nodes.
Thank you. There you go.
What was the question again, Eddie?
Let me scroll up here. The question was, how many licks does it take to get to the center of a Tootsie Roll? No, it's
a 3.
1, 2. Okay. Boy, I think I lost the question. My bad.
It's okay. It's all right.
The question was, how come we don't talk about gaps?
There it is.
And low volume nodes, high volume nodes, and all of that.
We do all the time. Gaps are, something that we're, certainly focusing on when the market opens with a gap or returns to a gap. We talked about the idea here in the S&P is that we attempted to go through a previous gap on the move to the upside on Friday. That has not yet been completed, is going through this gap, because I put them on there for the future. This is a gap from here to here in regular trading hour session. We got into it, we didn't get through it. We got into it, but we didn't get through it. But I mean, these are, a gap is like like a rejection area to me. The market didn't spend any time there, especially in regular trading hours. As far as low volume nodes and high volume nodes, what do we had this big upside rally on Friday. If we see that this volume node was occurring as this bar was closing, then this low volume node becomes support. Start building some volume up here. This low volume area can become support. Still, even here, you got the low volume node. Market closes up here, opens, trades to the volume shoulder. I call this volume shoulders. When you go from a high volume node to a low volume node, these volume shoulders can offer decent opportunities because, again, you can limit risk to some degree. If the market gets through the low volume node, then something you may want to get out of that trade. Something may have changed, but this is all rejection, acceptance.
But that would be a directional move. That's what I'm saying.
Yes,
so to me, it's
yeah.
So to me, if I have a responsive activity day where you have a lot of volume that's been built up, that's not going to be very useful because it's not going to tell you the direction. It might tell you the speed by which the price might go through a level, but generally when it comes to that kind of analysis, I just sometimes use it when it's a trending day and I'm really trying to get into a trade and I haven't caught it earlier. But yeah, when it comes to gaps, I do use gaps when the market, like you said, John, when the market opens outside of value, outside of range in relation to the previous day session, that's a gap. So it's not necessarily a gap where we moved through it quickly. It might be something that just moved away overnight and then we open with a gap. And then depending on
is kind of rejected areas in regular trading hours.
Yeah, I mean, it depends where we are, how far we are from the previous orientation areas as well. If we're too far out, that's usually a repricing event, in which case I would expect the market to keep going in the same direction or to have a neutral day, to not really do much. But if we are in line, sort of, it's not too far out, but it's a little bit of a gap, that's obviously a mispriced opportunity. And at that point, I would be looking for some kind of a reversion to the value area.
And then, there's old gaps and old naked points of control are also kind of considered weak structure.
That's right.
But only if price approaches them, right? I mean, it's, you can leave this for weeks or months at a time, but it's important when it heads back in that direction. So you're right. I got a comment here, John. Keep reminding me when I say here and here, I got to talk about specific levels. And the reward over risk on this. I mean, I'm looking for the market to go down to 4,400. So that's a 15 handle move for basically 5 or 6 handles of risk. So the risk reward is still good, but I don't have any idea if it's going to play out that way. So go ahead, Eddie. I'm sorry.
Okay. Yes, we've got a poll coming out here. All right. We're going to post it on our YouTube channel. And the poll is, would you like to listen to Topstep TV as a podcast, or do you prefer it on YouTube? All right. So either a podcast or YouTube. And I don't know, Jack, do you have...
Eddie, I changed the poll slightly just to see, I guess, what we're more interested in, because we're not taking it off of YouTube. But if people would find it helpful if we had a podcast version. I don't even know if a live podcast exists as a thing, but we can look into it. Just let us know if you'd find that helpful.
Okay, there you go. All right. Would you find it helpful to have Topstep TV as a podcast? Okay.
All right.
Get your vote in there. And we are forever and always trying to improve and upgrade Topstep TV with suggestions and comments and ideas. So please don't hold back. And no, there will not be a dunk tank for our traders here. Wouldn't be a bad idea, though, right?
Yeah, just
A
one more
dunk
time to
tank.
clarify. We are absolutely not thinking about switching from YouTube to a podcast. That'd be insane. It's just if we added something like that. Just checking.
Well, thank you, Jack.
Righty. Well, this trade's turning into an all-day sucker.
Initial balance. We're still inside it. This is why I don't like it. It's just so range bound usually on most days. Only when the price opens somewhere around my fixed daily range levels, I might consider taking it. Yeah. So the trade location already at the open has to be at a particular spot.
You wouldn't be considering the late spike or anything. I mean, maybe you would be, but yeah, we didn't sustain any action below the below the overnight low.
No, it tried to go below it and then it pulled back, and since then it's just reversed.
Right. Well,
So the spike is not good enough. To me, spike is kind of like a knee-jerk reaction to whatever was there, like any kind of interest that was there. And then if it's not sustained, that gives us valuable information that the price wasn't able to sustain it at that time. And yes, sure, you can have days where you get out and then it kind of smashes right through it and then does what you want to do. But on most occasions, you're going to get this kind of price action. So
yeah, it's the base of the late spike that is more probably a rejection, but because the opening range was the high of the day, that's the reason I took it. We still have our overnight high is pretty close to the base of that late spike, so that could provide another opportunity. We just took out the opening range high by 2 ticks. My stop was still there; I'd be out already.
Yeah.
Well, looks like not too much movement here in gold, but we've been sort of moving up. I think once we get past this 1940, 1941.
All right, we're out.
There we go. 1941. You're out of your trade, John?
Yep. 291, down 291. Strike one.
Strike one. We got a strike one. Strike one.
Strike one.
There's your one. And here we go with the move here. NASDAQ moving up.
All right.
Roy says, I didn't get the $11 promo. What's the code? Check your email, Roy. All right, we sent it out Saturday. You got till tonight before your carriage turns into a pumpkin. It's going to be 11:59 tonight, p.m. And check your email. So that first month for a new 50K combine, $11.
I think it's Veterans 11, the code.
Yes, 11/11, Veterans Day, Saturday. Also, a thing here too. People have been asking, hey, I want to try the Topstep X, TopstepTV viewers. You're going to be the first to know. Those that are listening, those that are here each and every day, it's available for everyone, but you're going to be the first to know about it. Until then, we're inviting more people from the wait list. I know that people are like, well, I signed up that first day. Well, that first day, I think we had 3,000 or 4,000 people sign up for it. So that list is long. So we're going to do this each day. So if you haven't heard from us, please be patient. You will. And also coming up today here, 11 a.m. Central Time, Power Players. We've got Isaac Suffren, former D1 collegiate basketball player and first-generation investor. So cool. Going to be looking forward to talking with him today.
That should be fun.
11 o'clock.
Former athletes are usually good traders too, because again, self-discipline.
Discipline.
Yeah,
right? practicing.
I used to look for former collegiate athletes for
In the
prop
pit?
firms on the floor.
And you'd want to get the biggest, tallest, biggest,
Yep.
widest guy. You'd use him as like a pick in the pits. Who'd you have? You had some tall people by you, didn't you, John?
Yeah, there were more like Euro traders that they were trying to get all these tall guys. And
Oh man, yeah.
So how tall are you? And Eddie, same question.
5'11".
Okay,
I'm 6'1".
right.
I was 6'2", but as you get old,
Yeah, you shrink. Yeah.
yeah.
Well, once I get to like 60 or something, I'm probably going to be very small.
For the computer,
I was going to say something else, but I'm like, that's probably not the right word.
You're
I'll
we
say
trader.
that for the computer traders, they cared less about height, but they still got the athletes. I think one of the prop firms that was a floor or two below us had. Do you guys remember those two twin U.S. gymnasts? The guys, the Ham brothers, I think it was. They were trading there.
Ham
They were
brothers.
not tall.
I think so. They probably had the platforms on.
Also, one last note on the Topstep X release. I believe we send out those emails at 10 a.m. Central every day, inviting new users.
Speaking of twins, do you remember Chris O'Donnell on the trading floor? Remember Chris O'Donnell? He played Batman, he played Robin in the new Batman movie.
Yeah.
He had a
He was
twin
on
on
the
the
floor?
floor. They were both on the floor. Yes, both of them. He's a twin.
I know Chris Farley's brother John was on the trading floor.
Japanese options, right? So was Norm from Cheers. His brother was in the Euros.
Right.
Vince Evans, the Bears quarterback, his brother Tyrone was in the S&P pit.
Tyrone was a cool dude.
Yeah.
He
We
played for the Raiders too.
who's the Blackhawk? He's on the radio now.
Troy Murray, man.
Troy Murray, yeah, he was in the
I'd catch the train with him. He lived here in LaGrange, and we'd do the USA crossword together. Great guy. He's doing the radio right now still.
Yeah.
Yeah, lots of celebrities.
There was I think it was a Chicago Cub. Glenn Beckert was on the
Beckert
floor.
was there. So was Larry Bittner. Who else? That was about Matt Suey from the Super Bowl team traded through Goldman.
Really? He was never on the floor,
Super Bowl?
though, right?
Yeah. Pardon me?
He was never on the floor, though, right?
He was on the floor a few times. Yeah, they brought him on the floor.
There's a prop firm where we used to call Goldman traders Goldman sucks.
Goldman sucks.
It's pretty
I
mean.
believe it.
Morgan
Yeah.
Staley.
Yeah.
Morgan Goldman
I
sucks.
see Steve saying that he met Mikhail Gorbachev on the floor.
Oh, yeah.
Yeah. My mom got pulled into a picture with him because she worked at the Board of Trade. She wasn't a trader, but her office was there. And it was like, I think in the paper, but I got to try and find that somewhere.
Gorbachev. I got Bush's autograph. Actually, twice. We had the trading cards.
Oh, God. I've got a story as well.
He was walking by and I handed him a card. He signed it and handed it, just a hand right back to me. I had another card. I put it right in front of him again. He signed it again. And because the thing was, I had a guy sitting at the desk watching the phones. And I'm like, I'll try to get you an autograph. And I got him an autograph. That was pretty cool.
I got Mary Lou Henner's autograph on the trading floor.
Did you? Taves, Kane was on the floor. Geez. Who's the little girl on ET? I forget her name. Brain fart.
Drew Barrymore?
Drew
Drew Barrymore
yeah.
was on the floor.
Yep.
There's a lot of people. Michael Jordan had a few runs on the trading floor. Joe Montagna. He was on the floor. I stepped on his foot accidentally. Said, what the?
Nice job.
It was, yeah. Well, somebody pulled him through the Deutschmark futures and option pit, and there really wasn't any room there. and they were walking them through the pits. And I turned around to get an order from the option pit to do a future. I stepped on his foot. I'm like, what the? Because nobody's supposed to walk between there. And I looked at him like, oh my God, it's Joe Mantegna.
You're lucky you didn't
It's
get
Fat
whacked.
Tony. Hey, it's Fat Tony.
You're lucky you didn't get whacked.
I didn't get whacked. No, I'm still here. Fat Tony. Well, gold making a healthy northern movement. Getting out of that sort of slump. Yeah, most of these markets.
D, you're still short crude, right?
I'm still short crude, still waiting. It's sitting underneath my entry.
Nothing's
So, yeah.
happening fast here today, is it?
No, it's Monday. Everything's really slow. So we wait as well.
So somebody commented it's Fade Hogue Day. It's been Fade Hogue Day for weeks now.
It's a bit mean.
It's true.
Yeah, but yeah, I'd like to see that same commenter come here, be on camera, and with their charts played everywhere with their P&L. Let's see how you do, mate.
Open invitation.
Yeah, there you go.
Exactly. Yeah. We have team trading, huh?
We got about 5 minutes till the top of the hour here in Chicago Central Time. As far as eco data, now we've got some stuff coming up here later in the. It's going to be after the close, I believe. So you might want to watch that. But in about 8 minutes, BOE going to be talking here, the Bank of England.
Mm-hmm.
And in about 3 minutes here, we got our consumer inflation expectations, which is a minor number. But 1 o'clock today, just a heads up, we got our federal budget balance. So we'll see what that is. Actually, the number is pretty skewed. They had a previous of negative 171 billion, expectation negative 65 billion. So that might turn the blender on. So let's pay attention about 1 o'clock today.
Mm-hmm.
We'll see, huh?
Yeah.
The real question is, are they going to come to some sort of stopgap thing with the government shutdown on Friday? Are they going to come up with something for real? Who knows?
I remember in 2013, there was like a 2-week government shutdown and everything just ground to a halt. It was horrible.
Yep.
So let's hope
Chris,
that doesn't quite happen this time.
Deeyana, Chris is asking, we bounced off a previous day's high. Does that have you thinking different?
We're talking crude oil?
I would think so, since you got a position there.
I don't really look at previous day high as per se, but I did say that on the daily chart, we do have the reversal morning star. I don't use previous days high as an orientation point because they are slightly more accurate intraday orientation points that I can take advantage of. Like, for example, you do have the value high, which we've left for now, but the auction is still struggling. So right now I'm using the fixed range DR as my reversal trade. You see, with the intraday, you have so many different orientation points that can happen around that day's high. It's okay to have it on your plan as, you know, like once the day finishes and you go, the price ended up higher than the previous day's high. So that's an information that I would definitely include. But as an orientation point intraday, it's not quite good enough for me.
Thank you, Deeyana. John, I got a couple for you here. Not a couple, but a couple questions.
Sure.
Menage a trois. They're asking you for a menage a trois. Hogue, have you ever watched SPX Cash for direction of ES? This is coming from Deep Dive Trading.
Not since I was on the floor. We used to have the ticker for the SPX on the trading floor. You could just kind of watch it, but I haven't really had the opportunity to watch it that closely since leaving the trading floor. So no.
Okay. Second question from our good friend Fred Decker. Hello, Fred. John Hogue,
Yes.
if ES continues to rally, where would you look for a cheap short? Settlement, overnight high, and prior high are all in the close proximity.
Right.
Well, that's
And,
stacked levels, right?
pardon?
Stacked levels. So you have multiple things happening around the
Right.
same area.
Right. So I'm already thinking about another short, but I'm probably not going to do that. First place would probably be the overnight high, similar to what we saw earlier when the market looked below it and then came back in the overnight high, the overnight low, I should say. We see the same thing happen. It would be a low risk opportunity. I know Fred's looking for cheap trades, and if that gives me a cheap trade, I'd probably try and take it. I mean, the real question now that we've taken out the opening range, which was the high, it's now been taken out. We're trying to auction higher. If we continue to auction higher, I got to be really careful looking for shorts. I feel like it could be like trying to short Friday because this market is, I mean, it's so resilient. So if I do see an opportunity at the overnight high, maybe I'll take it. If not, I'm probably going to be patient and see if we can get this whole gap filled. Am I looking for longs? I'm so nervous about being long because of how extended we are to the upside and all the uncertainties. But we were short. We had kind of a buy signal down here. I ignored it. Just wanted to see if we were going to catch the opening range for a little bit more than that. It didn't happen. So I'm chilling right now. But the first, like Deeyana, I like that, Deeyana. You call it stacked levels.
Yeah.
Yeah. So you can check this one. If that doesn't work, this one doesn't work, this one doesn't work, then you're saying screw it.
Yeah.
But if it offers cheap opportunities, cheap trades, then those are the ones I'm looking for.
And they're worth taking.
Yeah. Yeah.
So cheap,
because
yeah.
they don't cost you a lot. And you guys have all heard me say some of the best trades I've ever taken were taken solely because they were cheap.
Yeah.
Well, boys and girls, considering what we're doing today, anybody have any very good days? Let us know how your day is today, but we're going to let you know how Friday's best had done. So if we can, let's see Friday's best. Wow. All right.
Unbelievable.
Sir David Attenborough, 17,344. Wow.
All you had to do was buy it.
Nice.
The zebra is a very okay. Help me with this one.
Lilanya.
Lilanya, 15,000. Wow. Ryan K, 14,600. Maxim J, 13,900. And Alejandro C with 10,000. All in our express funded accounts. Wow, that's some big cash on a Friday.
Yeah.
Yeah.
But
Good
the
job.
move was huge.
Yeah.
Yes.
I hope that they, I guess, maybe heard me say that don't sell a late Friday rally, and they got it.
They got it. Well, thank you very much. Thanks. Friday's best. There you have it. All right. Is there any chance we can look at soybeans? Convergy says it's up massively today. How massively is it up today? Be something we check out. Beans, the musical fruit.
SX. There it is.
Up massively. Oh, lots of gaps.
And then this is the continuation chart.
Okay.
Big gappy.
So hang on, wait a minute. Oh yeah, this is November.
Yeah, it's it looks like an old contract.
We're going deep down the rabbit hole right now.
Oh yeah.
Right. What's the front month? March. Yeah, at least we're not seeing gaps. Yeah, look at that. It's screaming.
It's screaming north.
Mm-hmm.
Uh-oh, what do we do? Run out of beans?
Beans in the teens, 13, yeah.
There you go.
Here's the daily.
Let us know in the chat if there are any bean fiends out there.
Any bean traders? Bean traders going once?
Bean fiends.
Yeah. What are bean fiends?
I like it. Bean fiends.
Okay.
My dad would love that.
Yeah.
So another week high in the S&Ps.
It's hitting that little supply there, whatever chart you had just a minute ago.
Right here.
Mm-hmm. Yeah, the previous sell-off area. So now if you get a failed auction from there, you can get another short.
Get it now?
Well, I don't know. We'll see. You can try, and then you can monitor it to see whether it actually does fail. You can always have an assumption. Try it.
Yeah. If you see an opportunity, usually your best trade location is going to be right when you first see it.
Yeah. I mean, it did leave. I was watching it as it left the initial balance and as it started to print the next TPO. It left a few single prints, but now they're gone. So that indicates that the auction upside is not yet that strong.
Well, if I don't take it, it's going to be good.
Well, you got 2 more attempts, right?
Yep. And that is... Where's my stop, D?
What are you asking me for? I usually just use... I use 35 ticks, so I know you use a lot less.
All right, we're going to see if we end up taking out this week high then.
Mm-hmm.
Let's see what happens. It's just I'm so amused at the fact that everything I do has been wrong. I mean, I had some good trades last week that I should have married, and the married ones I shouldn't. The ones I marry I shouldn't have.
Where are you short from, Hogue?
44, 20, 50. Got some liquidity up here at 3 1/4. Liquidity seems to be to the upside.
Well, there are some sellers at 44, 23, 50 waiting.
Yeah, you got some. Yeah, that's the liquidity that those 3/4. It's going to take them out.
Yeah, but usually what happens is it reverses right after that.
I hope so.
Yeah, we'll see. Like I said, we still need the auction to actually fail. Right, my crude oil is slow. Couldn't get any slower today.
Yeah, I mean, there's nothing really moving that much here.
And now that it's, gold is moving.
It came off that low nice.
But it's a neutral day, though, so I'm a bit skeptical about further upside there.
Maybe a better opportunity to look for a short later on in gold.
Yeah.
But yeah, we're just not doing anything here.
I mean, I'm still in profit, but because it's so slow, this is probably not a failed auction. It's more a hallmark of responsive activity day, where it looks like it failed the auction, but really it's just kind of slowly crawling. That's not how failed auctions look like. They are usually quick, decisive moves, and already as soon as the auction fails, the next TPO already takes it through most of the initial balance. That's not happening here. So this means I have to modify my target expectation from 1.5 R, which would have been a target of 77.33, down to 1 R, which is 77.50, dead in the middle of the today's profile.
Right. So your initial, expectation for how this trade should have worked out did not.
No.
You're still going to stay in it and just kind of shorten up your target.
Yeah, because the trade is still valid. It's just the target is no longer valid, the original one, because I'll be asking for too much. So I'm just going to
Don't
change
want to
that.
be greedy, right?
No, not on a responsive day. That never works.
No, right. And here we are.
All right, so I've moved the target is at 77.50 now.
Okay. All right. We got to get you so you can share screens.
Yeah, I need a link.
Right.
Because I actually did manage to clean up my screen, so they're
did?
friendly. Yeah, and I found the black charts, the combination that worked for me with these lights and stuff. So yeah, it should be good to go.
Cool.
So yeah, if you guys throw me a link, maybe on Wednesday.
Yeah. Sure.
Yeah, we can certainly do that.
Mm-hmm.
Could probably even throw you a link now if you want.
Yeah, I mean, you can.
Yeah, let me talk to James.
Yeah.
Right. Okay. All right. I'm the worst. I'm terrible.
Yes. Deeyana has a YouTube channel.
Yeah. Market stalkers. Yeah.
Market
it's on the top.
stalkers.
It's on the top. The link is on top. It's what is it? Linked?
Yeah, it's market stalkers, I think. Yeah.
Mhm.
Oh, it's got all of it. Yeah, it's got all of my links. Thanks, guys.
There you go.
Mm-hmm.
Hank, thank you very much. Yeah, I'm really kind of kidding, but it is frustrating. I mean, I'm not worried about the money. I just been a little cold, and I honestly, if you think about it, by Jared's standard, I've been basically in my C game. I'm not really focused, which I should be, but at least we're having fun.
Yeah.
It's about fun, right? Tradertainment, ladies and gentlemen.
Tradertainment, right?
Tradertainment. Gold making that nice northern run here. 44.5 last.
Yeah, it's some pretty good rejection down there.
Yeah, I hope
Time framing.
some of our traders didn't get caught underneath that settlement 37.70, thinking we'd go lower, but nice move there. Nice move.
That's it. I quit.
You're done throwing the towel in? Well, preserve capital, trade for another day. It's probably.
Yeah, this would be strike two. I'm all right with 3 strikes.
You got a second strike already, John?
Strike two.
Well, I'm not out of it yet. It came within a tick of my stop.
Well, as our good friend says,
Patience, discipline, and management are so very important each and every trade day.
yes.
Yep.
Thank you, Morgan Freeman. I sure feel like I'm in Shawshank right now.
If you don't pay attention, you are going to Shawshank this trade.
Ooh, be careful. You don't want to Shawshank a trade, right?
No.
No. Dickie Cleary, question for D. Do you follow options skew in oil and its impact on the front month?
I do not, no, because most of my trades only last anywhere from 10 minutes up, maybe up to 2 hours if it's like a really big day or something. And I just don't feel that that's very useful to me. Not that, you shouldn't use it. If you find it useful, then go ahead. I just, over the years, cleaned up all the stuff that I didn't really find that useful. So no, I do not follow.
Do you ever watch watch for failed breakdowns or breakouts? Orlando is asking.
Breakouts only of the initial balance range to see whether we're going to have a sustained auction. But even that has to be at the right larger time frame chart location, and it has to not exhaust the whole average daily range, ideally. So a whole bunch of other stuff. So with my decisions, it's all think of a flow diagram. Like if this happens, then I expect this to happen. If that happens, then you go to the next box and the next box. I'm going to close my crude oil because I do not want to see this push higher.
Okay. Deeyana, we really love you being on here with us. And I was wondering how you got started in this business. Who sort of put the bug in your ear?
Well, me. Oh, right. Okay. So back in the day, I used to live in the city as a musician, which is, that was minus $110.
Well managed.
Yeah.
Well managed.
So yeah, so when I was a musician, I lived in the city, which is kind of like Wall Street of London. It's a financial center. And we used to have a lot of gigs in and around bars there. So with that meant that I was hanging around a lot of bankers and people who worked for investment banks. So one day I kind of got chatting to one of my friends who was a trader himself. And he said, oh, you have all that like discipline and stuff and intelligence. Maybe you should try trading because, if I can do it, I bet you can definitely do it. And I was like, me, finance, like I'm really bad at maths. It was like literally my worst subject. And yet I was a pretty good student overall. And he said, no, it's not necessarily like all maths. It's a lot to do with patterns. And I was like, yeah, okay, yeah, whatever, mate. But he then showed me candlestick charts. And to me, I thought they looked like musical notes, like a music sheet. Right. So immediately I was like, what is that? I like that. And I got obsessed. I got home and I started looking into it and searching. And basically I just caught the bug. And I just thought to myself, oh my God, this is like a psychological blueprint of the entire financial world. I need to know how this works. And that kicked off my 16-year journey to become a trader. So obviously I started as a swing trader, independent, just trading my own money. In the first year though, I didn't do that great because this was like 2007. I didn't know what I was doing because I came from a non-financial background. I was a musician, and yes, I was a pretty high-level musician, but I had never seen anything financial up until that point. So when I saw the guy next time, that was like probably about 8-9 months after, and I said, "Yeah, man, I tried it, but I don't know. It's like it all seems impossible." And he said, "No, let me teach you this thing, supply, demand, buyers, sellers." So in a way, I was, at the very beginning, I was immediately put on the right path to not use retail nonsense indicators that lag, but he was immediately teaching me how to read price action. And then from there on out, again, I got really obsessed. As soon as I started systematically looking at how the prices behaved upon leaving the zones and stuff, I started having success. So for about 5 years after that, I was a swing trader and I only traded euro-dollar. And I did pretty well. I started on a really small account. I started on like a $2,000 account. And then I grew that to about 250K. and that's pounds. And with the exchange rate back then, it was probably close to $500,000. And then the markets changed in 2012, so I started struggling. And I thought to myself, well, I'm not giving up now. Like, I was already on the path to give up my music career completely, because I really like trading. Like, it was like my new passion and my new obsession. So I thought to myself, well, I managed to make all this cash as a swing trader. Maybe I should make this into a proper career. But because I didn't come from any kind of a financial background, that meant I had to find a program that would teach me how to do intraday trading, which I wasn't very good at that point. So I actually found a program in Chicago. They basically just wanted fresh people who didn't come from a financial background. And obviously it cost money. But at the end of that, they would give you a funded account. That was the old business model. So I went in there. They taught us a little bit about volume profile. They didn't really teach us market profile to the depth that John teaches people.
Right.
But it was enough for me to start turning a corner intraday, because I could still trade as a swing trader. But, I had the problem of using stop losses that were way too large. So I never got the positive risk reward. It was always like 0.5, 0.8, 0.5, and then time would run out. The only thing that partially made sense to me, that sort of kept me out of trouble, was the average daily ranges as a timing helper. So that was okay. And I kind of modeled through my simulated period. So they gave me an account. And from there on out, I was just constantly improving. And then I think in about 2016, I think I came across Topstep. And that's where I learned about market profile and everything. And they became my first prop firm. I couldn't stay in Chicago. It was way too cold for me. So I scampered off back to London. So yeah. And then I looked for another prop firm. But I ended up working for an asset management firm for about a month. Completely hated that. So, yeah. And here we are. many moons later, yeah.
That's pretty cool. Yeah, Self-Made Dude says, I knew a Juilliard piano teacher who also saw charts as musical notes.
Yeah. Yeah, it's very similar. I mean, everything is pattern-based, right? So it makes a lot of sense.
Right. Awesome. Let's see. Dennis Davis, what instrument does Deeyana play?
I initially played flute classically, so I have a master's degree in flute. But when I was about 13, I switched to alto sax, so I actually became a pretty well-known session musician in the UK, but also in Yugoslavia before I moved out. And I also play electric guitar. So over the years, I've had gigs in both, pretty high-profile gigs for both instruments.
Multi-talented. See, now, are you into Jethro Tull at all since you played the flute?
Yeah, I was. Yeah, when I was still really into flute, I was into Jethro Tull a lot, which wasn't something that my teachers agreed with. They were like, "No, don't do that. What are you playing?" So I was like, "Oh, just classical." And then I was actually a bit of a rebel, so I created my own cadence, which is like the piece at the end of the concerto that you can basically do yourself. So I composed it myself. They wanted to like expel me. They were like, who do you think you are, doing your own cadence? And I was like, well, James Galway does it. Why couldn't I do it? And they're like, well, yeah, that's James Galway. I was like, yeah, but I'm D, So yeah, illusions of grandeur through and through.
Yeah.
So yeah, but yeah, once I found the trading, I think it's there's a lot less backstabbing than there is in music, and you get to stay at home. So the older I got, the less energy I had to live on tour buses and stuff. So now I'm pretty happy in my little office and just trading for a living.
Nice. There you have it, ladies and gentlemen. There is a story of Deeyana, how she got started.
I played drums for 40 years, and how I wish I played the flute, dragging those drums.
Dragging around, yeah.
Oh my
See,
God,
I played
we had
keyboards.
a drummer. Yeah, you play the keyboards. Yeah, but that's not as heavy as drums, because drummers have carpets and stuff, so they don't slip.
And I had a Hammond B3 for a very short time. That just didn't work. You get everybody to help you bring it to a gig, but at the end of the gig, everybody's sort of like passed out.
Oh no, we were pretty good. Like we used to help everybody pack up. But yeah, it made me laugh that the drummer actually carried a carpet because he slipped on one of the gigs and he fell backwards from the stage, and it's pretty dangerous. And then the next time I saw him, he's like coming out of the van and he's like, yeah, hold up, I've just got one more thing. And then he drags out this carpet and I'm like, what's that? And he's like, oh yeah, I have to do it because I slip. I'm like, okay, cool.
And the bass drum runs away from you if you don't have it.
Yeah, exactly. Yeah, it's difficult. But I would have thought that they made, it never really occurred to me before I saw that. I would have thought they made the stage slip free. Apparently not. So yeah, poor you. What can I say?
Amazing.
Did you ever slip, John?
No, I mean, I never fell off like the back of a stage, but you always had to make sure you had that piece of carpeting. Otherwise,
yeah, you always have to
chase
shuffle
your bass drum all over the place.
Yeah.
You guys got to pull it back,
Yeah.
in the butt. I got to tell you though, Dee, my daughter picked up the flute, and she was in 4th and 5th grade, and then at the end of 5th grade, she got a scholarship to a band camp for 5th graders.
Oh wow.
And she
That's
didn't
amazing.
want it. She's like,
Oh really?
I don't want to play this anymore because it was 0 hour. They had to be there an hour before everybody else. But she was so good at it when she told the band director, he basically told us she's amazing. Like she's in 5th grade. She could sit first chair in a high school band, maybe even a college band right now.
Wow.
And when she told him that she didn't want to play anymore and she didn't want the scholarship, give it to somebody who wants it, he started crying.
Oh no.
Oh, because it's so rare to get properly talented kids. Usually from what I've seen, they have to kiss a lot of frogs before they find that one kid that's actually talented. And he's probably thinking, thank God. And then she says, oh, I don't want it. I would cry too. Yeah.
I was like, and he knew I was a musician, and he's like, can't you do anything? I'm like,
No. Do something.
Have you met my daughter? Probably.
Yeah. My niece played piano, and then she didn't want it either. She was like, I don't like it. I don't like the teacher. She's mean to me. And just by accident, her teacher was my school friend. Like we went to
oh, really?
Music college together, and we were actually properly like friends for many years. And then I was like, why are you being mean to my niece? Like, what the hell?
What the hell?
She's like, I didn't think I was being mean to her. I was just telling her that she doesn't practice. And I'm like, well, she doesn't practice. We know that. So yeah, that all fell through as well. And you couldn't make them, it's got to be their decision in the end.
Yeah. I practiced a lot as a drummer. I had a couple of really good teachers. I forget what year it was, but I won like the Louis Belson jazz drummer.
Wow.
With a certain age, like in 1978, something like that. And one of my teachers wanted me to do this competition. I'm like, I'm not competing, but I did it and I won.
Yeah, I did a couple of competitions in Italy and stuff with flute. But as a musician, we got on TV quite early on, and then we were just session musicians. So obviously you're not really competing, then you're just working and you're in that circuit and they're constantly booking you, and there's not a lot of time for anything else. You live on a tour bus and planes and stuff. And it's great when you're young, but then you get to a certain point and you're like, why am I doing this again?
Right.
Because it's just like Groundhog Day. It's always the same. So, yeah.
Well, I tell you, it sort of gives you, we've all sort of moved into trading, and that's helped us a lot with the discipline. And I tell you, the homework, you're not going to get any better. You keep doing the homework, and that's, with trading and, such is life. But, just taking a look at some of these markets here today. I mean, opportunity has been tough unless you've gotten on the right bus at the right time. I'm watching my gold here, and I've been sitting on my hands watching, something that I've been waiting for today, and I missed it. So I'm not going to chase it. But anyway,
well, I've just got a signal for long crude, so I'm going to be going long as soon as this candle finishes. So if we are outside of the initial balance, if it closes above it in about 1 minute, I'll be in, so I can update you guys if you want how that goes.
Johnny, what's your P&L?
I'm down 495.
Okay.
I'm down 110.
right.
Yeah, I'm no longer in a position. So,
All right. Well, Deeyana, I appreciate you being here with us today. We're going to be getting Mick on here very soon. But yeah, keep us posted. You got a position, you're going back in crude. Let us know, and we'll share it with everybody. But very nice to see you. Way to start the week on a Monday, Deeyana, with it. You know, it makes it all worthwhile. I'm telling you.
Oh, thank you, Eddie.
So we will have you back here Wednesday.
Yes,
And
that's right.
you have a very good day.
Thank you. Always a pleasure.
Steve.
Thanks.
We'll see you. Goodbye. Goodbye. All right, we're going to take a little coffee break here, and we're going to bring Mick on at 11 o'clock here. We've got Isaac. Isaac going to join us for Power Players. We'll be right back.
All right, it is time for Shoulder Tap with our good friend Mick. How you doing, Mick? How was your weekend?
Happy Monday, John. Weekend was awesome. Thanks for asking. How's yours?
Good. Learned a lot, did a few things around the house, and thought I was ready for the day today. I could use a shoulder tap, my friend.
Struggling a little bit right now?
Yeah, just most days lately, I'm just not, I guess, not focused and just not doing the right things here. So we'll see how things play out over time.
Well, I know you.
I'm not worried about it. I'm not losing a lot of money. I'm just not making it. So, well,
right. And I know you only trade when you see really good trading opportunities. I know you're doing the tradertainment. We're putting a little bit more of some more positions on than we probably normally would be if we weren't doing TV and, talking trading and entertainment. I know you're super selective. You keep those losing days small. And I know you had some good days last week.
Yeah, a couple.
That beard of yours will find the good trades.
Yeah. Trying to make the market think I'm Santa Claus.
Yeah, John's always been more of a goatee guy, and now I like the filling in of the rest of it.
It's my winter coat.
Yeah, you're silver fox all around.
Yes, right. Yeah. All right. So what's going on?
John, we got some exciting stuff today. Number one, the boards today there's so much green on the boards. I had to pick and choose, and also I've had a busy morning working with some of our traders, but there's more profitable days than one could mention on this segment. I could just turn around, look at the boards, and rattle off all these big 4-figure winning days.
Nice.
There are some notable ones that I want to talk about. I want to talk trading cards about some of the people that we called up to live last week. I don't know if you saw it, but I know we were talking about it on the segment last week. We had called up more traders last week than any other week. And yeah, we were at 29 on the week last week.
Unreal. Wow.
Yeah, 29 total. And actually, I think last week was one of the biggest weeks. That and the week before, I don't know. It's been a lot of traders lately. I'm finding myself confused now that I'm talking to an audience on live TV. But we did have 29 call-ups to live from the Express Fundeds last week.
Why do you think it was that way last week? Is it the kind of the directional activity of the equities, some bigger trending moves?
That's what I was thinking, and then I saw that between Monday and Friday, yeah, we had some like up days and whatnot, but it was actually narrower ranges in the equities than the previous week. And with most of our traders trading equity indices, it actually makes sense that I might be getting last week confused with the week prior, because we did the prior week with all those big uptrend days. We did have a lot of people moving into live accounts from their XFA. I will say, though, of those traders, I mean, those statistics that we showed last week, 90% winning days, 100% winning days, like that's really, really good trading in any market environment. But I think that was a little bit more about the traders than the market environment itself, just because we had really high win rates on the trades, really high win rates on the days. Which some of the people we're featuring today also have pretty high win rates and winning days too. I can't wait to dive into some of the metrics for 3 of the traders that we did call up to live last week. One thing I noted, and I didn't have time this morning to tally it all up just yet. I'm going to do it sadly after the segment, but I can talk about it for tomorrow's segment.
Sure.
Or actually, I'll have Brett talk about it because he's taking the reins on Shoulder Tap tomorrow.
Okay.
I want to get a total count for the payouts. Of those express funded accounts that we transferred to live, there were quite a bit of payouts, which is exciting stuff. We want our traders knowing that they can take payouts in the express funded account as well as the live account. So there were some big numbers there. Actually, someone from the marketing team this morning just said to me, we've got a little channel where all the payouts roll through. And she reached out and was like, there's a lot of big numbers here. Can we use these? Can we talk about them? I said, absolutely. That's what we like doing, showcasing good trading. But also this segment's part of the segment showcasing people where there's areas for improvement or mistakes not to make potentially. I think you would agree that there might be more to learn from people's mishaps or mistakes than actually their successes.
100%.
Similar to just about any other business out there too. It's not all about hearing about what works. You got to hear about what hasn't worked for others and where other people have failed. That'll help you not do what they did. And it's a free lesson to save yourself in business, and especially in this business, thousands and thousands of dollars potentially. Speaking of thousands, I'm going to rattle off some big numbers today.
All right.
Number one, Jordan C. up $20,000 in their express funded account, slinging 15 lots. I had talked about Jordan last week. Jordan's a big swinger. He actually almost put himself out of his express funded account last week, and then put his nose to the grindstone and has been, trading it out this morning, increasing his account balance, with that slapping on size in accordance with the scaling plan. So he was swinging some 15 contracts, both long and short earlier today, and up $20,000 as a result of it. So that's him and his Express funded account. Big shout out to one of our other traders, Nick T, who's in a live account. Talked about Nick last week. There was one day where Nick had been up about 3,600 and then ended the day down 3,000. That was kind of a shoulder tap. I was calling him out for that.
Right.
And then he also had put himself in a very sticky situation when he had only a little over 3,000 in the account and ended up hitting his $3,000 daily loss limit.
Ouch.
Well, he's not up this much right now, but when I wrote it down on my little note card, he was up $7,300 this morning, playing the market really well. And also, just like Jordan, as he grew that account balance, he was increasing his position sizing. So he was trading big size that put him there. And last I looked, he's probably up around 3,000 on the day right now, but also bought himself some trading cushion in that account.
Nice.
He had a low balance this morning. So if he can, learn from last week when he lost 3,000 on an account that didn't have much more than 3,000 on it, maybe risk less now that you're in a more comfortable position and ensure that you could afford to have a couple losing days or a few losing days in a row. So that's what I want Nick to be thinking about. Big shout out to Abdel S in his XFA, up 10,000. Then he's up. Then we've got Huasu L up 15,000 across 2 XFAs. They've got 2 XFAs. They're trade copying, and they're doing really, really well today. And then a shout out to Juanyo H, up 11,000 in their XFA. I've got Michael T. I almost slipped and said the last name. Someone we've been watching very closely over the last few weeks, who's had big ups, big downs. Michael T. I won't fill the rest in on the last name. Michael T is up 10,000 in his XFA today. And then shout out to Dario B. Dario has been one of our traders in the program for a long time. He's actually helping us out as an independent contractor right now with Discord, and I want to give Dario a shout out because he's up a couple G's on the day or up on the morning right now. So shout out to you, Dario. Not sure if you watch this segment, but very happy for you to see you doing well today. So all in all, big P&Ls. I know last week I had mentioned that the group of funded traders kind of split it up into 2 ways. We had the express funded accounts that were trading really, really well on the week. And then we had the live accounts where our traders were struggling, the ones that we had called up. XFA traders finished last week super strong. Coming out of the gates again today, it's kind of looking a little bit like it was last week. Traders in the XFA, lights out, a lot of P&L, a lot of big P&L. And the people in the live accounts not putting up quite the winners that the express funded accounts are. I will say, though, that Hugh, our big trader out of France, who's brought his account balance with payouts up over $100,000. He's up 7,400 today. Seen him trading everywhere from 2 contracts to 11 contracts. And I say that. Excuse me?
He's slacking today.
Slack? Well, no, he's doing what he does. And I mentioned his position sizing because I might come in and see him with 15 contracts on. I might come in and see him with 1 contract on. This is someone who, just because they can trade big doesn't mean they trade big all the time. It's situationally based. And while they may go all in, all out sometimes, they'll also scale at other times. So I want to highlight him not just for his winning day, and more so, not about his winning day, but more so that he's flexible with his position sizing based on what he's seen in the markets and how he wants to manage his trades or his setups. So big shout out to Hugh. Say that 10 times fast. With all that, all the shout outs, the P&Ls, I want to highlight 3 traders of the many that we called up last week to live. The first one being Daniil. Daniil is trading out of Tacoma, Washington. And for those of you that were tuning in last week, you might catch on to the joke here. For those of you that are new, happy to see we've got a pretty picture here with a mountain in the background.
Yeah, there you go.
And there are no prisons. Maybe there's a prison there, but it's just not in view. So Daniil, trading everything under the sun.
Yeah, it looks like it, huh?
Metals, equities, international stock currencies, oil, energies, and even some micros on a number of those products. So great stats here. In line with everything else we're sharing for the traders we're calling up, high winning day percentage, and we've got high winning trade percentage, which this is fabulous. If you can even put these metrics up for a period of time, you're in good shape. To maintain these metrics consistently over the course of a trading career, you're even better shape. Sitting pretty, driving something pretty. Sitting in something pretty and driving in something pretty.
Right.
Really good metrics. I will say the risk reward ratio is about 1-to-1 here on Anil, and for every winner, he's making about 255 on average. The losses are about 238. With risk reward like this, you do need high winning trade percentages,
right,
and high winning day percentages, because if you didn't have those, instead of me being able to say he's averaging $660 a day P&L wise, he might be averaging $0 a day P&L wise. So if your risk rewards 1-to-1, you're going to need to be right more than a larger percentage of the time. But if you're 2-to-1, 3-to-1, you don't have to have high winning day percentages or high winning trade percentages to be putting up good numbers and be profitable. So what I don't really see much in the way of areas for improvement standing out. Maybe look at that risk reward ratio, but this has been over the course of a 22 trading day, spent in the account before they got called up to live. What I do also like here, in addition to those metrics, is the holding times, 2 hours, more than 2 hours on the winning trades.
Yeah, I was looking at that.
Yeah, losing trades, high winning trade times also. That was more at about 1 hour and 48 minutes on average. But to be holding trades over 2 hours tells me that Daniil's been, while he's only been with Topstep since 2023, definitely been participating in the markets for a longer period of time, because I don't know of many newer traders that are getting into this industry that have the patience, the confidence, or the risk
tolerance
to hold something for 2 hours. Lord knows I couldn't when I got started.
Yeah, so I mean, I don't know how these guys are finding all these winning trades. I can't seem to find one to save my life these days, but I agree with you. I mean, if there is an area to improve, keeping that high winning trade percentage is going to be difficult to maintain. So, maybe, Daniil, think about trying to hold on to some of those winners for a little bit bigger profits if they're there. I mean, we don't know what you're looking at. We don't know the time frame, the tools, anything like that. But maybe start stretching those muscles a little bit, building those longer time frame muscles for some bigger profits on some of those trades. Because I mean, if you're 2-to-1 and 73% winning trades, you're killing it.
Yes. And I think there's a really good opportunity there and really quickly, while we're talking about the long hold times, I've got micros up here as products traded. There are some long hold times in the micros. I would think that maybe some of our viewers would say, oh, those hold times have to be weighted down by the micros. They're not. These hold times are in gold, equities, the mini contracts, not the micro contracts. So just wanted to get in front of that there.
Right. I mean, if it was all winning trades using the bigger contracts, his daily P&L would be much bigger.
Yes, indeed. And I think for these longer hold times too, John, that I'm actually a little surprised that the risk reward is 1-to-1 with those higher hold times, because I'm a higher time frame person myself, and usually when I'm pulling the trigger on trades, as few and far between as they are, my risk reward is quite substantial to 1-to-1.
Right.
And I think for people that are catching a piece of the trend for the day, holding for 2 hours plus, I think it's pretty easy to say, I see there's an opportunity. Maybe it's not pretty easy, but more commonly than not, I see, I could risk, $1,000 here to make $4,000 here. kind of thing. So I'm a little surprised by that, but those are how the metrics are playing out, and very happy for Daniil. Let's keep this consistency on the winning trades, the winning days, and the good money management. Let's bring it over to the live account because Daniil will be starting in a live account this week.
Good luck, Daniil.
Yes.
Just dance with the one you brung.
I've always liked that you using that slogan, John. It's absolutely true. John says that, and it makes me think about conversations we've had, he and I both, as well as myself and Brett. There's some traders that will pass the trading combine using one strategy. They get to an express funded account or a live account, and they completely change things. We've talked a number of times about the psychological differences between trading for an evaluation where you want to reach a profit target, or trading in a sim funded account, or trading in the live markets. There's big differences. One constant that you as a trader and our TopStep program want to carry with you is whatever strategy is working for you overall, whatever strategy is working for you at the time, that you don't go changing that. Continue doing what you're doing. Normally, to my dismay, we see people changing things where they get more reckless and they want to trade bigger. They feel like, hey, I'm funded. I've got something to prove now. Where actually, if you're going to make any changes, scale things back a little bit. You don't have a profit target. Your job is to find good trades and take payouts.
Just build it. Yeah.
Yes, small building blocks. And like we said last week, you got where you wanted to be. Now find good trades and don't go changing something and doing something completely different.
Right. Stick with what works.
Yes. Speaking of what works, let's pull up a card for Linda L. She goes by L.
L. I know L.
Yes, I know L too.
She's been around for a long time.
Yeah, and many people at TopStep probably know her. She's been around since 2014. She's been funded with us before, and she's getting funded with us again because she was knocking it out of the park, trading the Dow and the crude oil in that express funded account of hers. In addition to trading well, she's also done a good job about paying herself too. Regular payouts, they don't have to be huge, but she's strung together her winning days and she's requested payouts, making sure that she's kept a nice account cushion. For anybody else who I mention here, or if I don't mention you here, once you get transferred from the XFA to a live account, you can take up to half of your account balance as a payout. I love it when people do that. We love people taking money and putting it in their pockets from their trading accounts. We do need to make sure that we're keeping a nice cushion when we start in that live account to make sure that if I go hit my daily loss limit of 3,000 3 days in a row on my first 3 trading days, that I still have quite a bit of ammo to throw at the markets in the following days, weeks, and months. As a reminder, our job here as traders, we've got a lot of jobs as traders, but for those people out there that make that make and lose lots of money in short term, those people less likely have anything to show from it. It's the people that are consistent, trade within their means, make sure they don't put themselves in a position where they could lose this account. And then those are the people that after, hey, I've been in this account for 12 months. Now look what I have to show for it. Those are the people that, can really have better odds of being successful in the business and continuing to take more money out of the markets. Live to trade another day always. If you can't keep an account, you're not going to be making money. So keep those accounts. I feel like Linda is going to do a very good job keeping this account. She's been putting up average daily P&L of $740. Looking good there. 79% winning days, almost 70% winning trades. Gosh, I remember when I was day trading, when I first started out, if 3/4 of my trades were all winning trades in the day, I felt like the biggest rock star.
Yeah, and I'm happy for Elle, and we've known her for quite a long time, and I'm glad that she's doing well and paying herself and, you know, moving to the live account and, you know, just keep at it, Al. Keep at it. Very nice job.
Yeah, this account, I don't have any areas of improvement that are worth noting here for Elle. She's, you know, the metrics speak for themselves. She has traded a high number of days in this account too. I think she was up over 30 days in the account.
Nice.
So
Nice.
to maintain that high percentage of winning days over 30 days is a good number of days. It's a good track record. She's doing a number of things right, and I didn't really see any areas to point out of things doing wrong. So very happy to her, and I tip my hat for your development since you've been with us in 2014. What we're seeing right now is stuff of a very good trader who's got very good odds at standing on their own two legs and continuing to take money out of the market. So that's what we hope she continues doing in the live account. And I have up here, I hope you guys recognize how much I like talking about hold times and good, healthy hold times. I talk about this because I'm a firm believer in the most successful day traders will catch a piece of the trend for the day. Doesn't mean you need to catch the whole move, but get in there, have your bias, ride a position out, and that's what she's doing. She's holding on to her trades 1.5 hours. I don't remember those long of hold times and accounts prior to this one. So I feel like there's been a lot of maturing around Elle, and I'm very happy for her. So congrats. Can't wait for you to start your live account this week.
Well, nice job, Al. Very, very happy to see this. Very happy to hear about it. Congratulations. Love the idea that she's been in this account 30 days. Great metrics, making money. Fantastic. I mean, that's the goal for everybody, I think, in futures, in trading at all, is to maintain an account for a long period of time. She's doing a really good job of that.
Yeah.
I'm very happy for her.
John, you've probably gotten more experience than anybody else here at Topstep with working on developing our traders, and everybody's so fortunate for the opportunity to work with you, be it, you know, with one-on-one performance coaching, which is something we used to do, to group coaching now, to being able to listen to your mindset and your thoughts on a daily basis. I would venture to guess that there's nothing more satisfying to you as someone who truly believes in the development of the people that you're working with. I mean, how good does it feel to see one of your coaching clients talk about their progress and their newfound finding of success? Tell us a little bit about what that means for you as a coach and a mentor and you've been my mentor throughout the 8-something years that we've worked together for. John's a smart guy. I like talking to people about things that they know better than me. It's always good. You learn things talking to people that are smarter than you, and John is one of those people for me.
Well, Mick, it's very, very nice of you to say all of that. And you know, it is, of course, my hope that everybody that I come in contact with does benefit from that opportunity to some degree or another. And you know, when I was working with people one-on-one, one of the first things I would say is, you know, your progress relies 100% on you. If you do the work, if you do the things that you're supposed to do, you will improve. You will get better. You know, and the goal was always be able to maintain an account for a long time. That was really just the goal. I wasn't trying to make millionaires, just trying to get people who are doing what Elle is doing. She's maintaining the account, and it is so gratifying and so makes me so happy to see people that I've had the opportunity to work with in any regard whatsoever doing well. I get a lot of emails from people saying, "Hey, thank you. You know, you told me about this. This made a big difference." And I love getting those emails. I save them, actually. I probably saved all my birthday cards from when I was a kid too, because I'm like sentimental that way. But it just, Mick, it's what keeps me coming. It's what keeps me, you know, it keeps me here. It's one of the most happy periods and times in my life was when I see somebody that's been doing well.
Yeah, that's coming from a guy who's very passionate about what he's doing, knows his craft well. And I also, I've pulled some of that passion from John. I'm very passionate about what I do and the traders I work with. You'll pick up on that from everybody here at Topstep that gets on this Topstep TV and starts talking about the traders that they've worked with. And it also, with those great feelings, also, we share some of the pains when we do see those people that we work with doing things
That's true.
that we may have talked about not doing. And I don't really think it's to a fault, but when I've worked with individuals and I've coached traders and I coach traders that are in our live accounts and speak with these traders, many of them will know better. I shouldn't say many of them. Some will know better and then do something that they know they shouldn't do. And, that's after speaking with them about not doing that. And then the following day, something happens and they make an exception. And that's really hard. I take it personally. I probably shouldn't, but I take it a little bit personally. And because I really am we want our traders to do well, and I'm in their corner. So when I see them doing something that we talked about maybe not doing, it's really hard on me. So I love seeing and being able to talk about someone that I've been familiar with Elle. I've been familiar with for years now, and to see that I get to talk about her on live TV on Topstep TV for the shoulder tap segment. Most of the credit to her, no doubt. I'm not trying to take credit for this at all. All the credit to her, for as a matter of fact. But this is a happy moment for me because things are working, and it takes time in a lot of cases. Whether it be people really get disciplined and they buckle down, or it's a number of failed experiences where they keep trying the same thing over and over and get the same results, and then they finally decide, they wake up one day and they're I'm tired of doing the same thing and getting the same results. I'm going to make a change. I'm going to do what I more so what I need to do than what I want to do. And I think Elle is a good example of she did what she needed to do, and now we're talking about her today. So I'm very happy to be able to do that, and I'm very happy for her. I do have I realized that we kind of got a little wordy here. I have a third trading card that I can save for tomorrow because I see we're on time for the segment. But I will at least give a shout out to Moulay L, another one of our traders from an XFA going to live. We can talk about him tomorrow because I also have some great metrics to share from him. A couple things to work on, but someone who's going to be starting in a live account this week. And
awesome.
Very happy for him as well.
Well, thank you, Mick. Thanks for the kind words. And, that makes me happy anytime I see somebody succeeding. It's all them, man. It's all them. Mick, much.
I've got nothing but kind words for you, John, unless we're screwing around with each other. I can have a nasty joking side to me because we know how to have fun.
Of course. Yep. All right.
AC, I hear.
Yeah. She's probably busting at the seams to get outside. So
yeah. I think Reva's laying at the front door right now, guarding the risk team here.
Yes. Don't ever try and sneak in on the risk team because they got an attack dog there.
Yeah, it's the sweetest attack dog, but she'll let you know you can't come in unless you're welcome.
Awesome, Mick. Thank you very much. It's a great segment as always. We'll look forward to seeing Brett tomorrow and you back here on Wednesday.
Yeah, likewise. Thanks so much, John. Have a great day, everybody.
All right, we're going to take a bit of a coffee break here, and we will be ready for Power Players in just a couple of minutes. So stick around.
And welcome back. Welcome back to Power Players. And we've got Isaac Suffren with us, a former D1 collegiate basketball player to a multi-six-figure trader. He's the owner of Blueprint Lifestyle. That's where he's taught a huge number, 35,000, if not more, people the ways of the market. I'd like to say, welcome back, Isaac. How are you today?
I'm good, Eddie. Appreciate you for having me back on today.
Yeah, I appreciate you coming back here as a fan favorite. We had a lot of people sending in emails. Let's get Isaac back on Topstep TV, and we got you here today. Now, let's start out today for those that do not know. Tell us about yourself and where you're from.
Yeah, so I'm originally from Atlanta, Georgia. I grew up, I moved around a lot, but born and raised in Atlanta before moving to Charlotte for high school. Basketball was pretty much my identity. Growing up, my whole family played college basketball, D1 level. I had a few members play, run track at a Division I level, football Division I level. So I come from a family of athletes. But even so, I've always been very business minded, trying to get my own way. Eventually 2020. So at end of very, very beginning of 2020, I got into trading and was able to take advantage of, although it was a pretty dark era for a lot of people, I was able to take advantage of the COVID era where we were just locked in the house. Right. And pretty much dedicated my time to coming out of there with a new skill. And I was able to, focus up on trading for, quite a while without any other responsibilities. And, fast forward to, 2023, here I am right now.
What gave you the idea for Blueprint Lifestyle?
It was never it's very interesting. So most people create a business for money. Right. Creating Blueprint was genuinely to help people because people kept, coming to me, hey, how do you do this? How do you do that? Hey guys, let me actually form a group since so many people want to, let's actually create a space. Then it went into, it just grew bigger than I ever imagined it would grow. And then as time went on, the mission became more obvious. And now there's a team of almost 15 people that help Blueprint operate on a day-to-day basis. And we've been able to do some really good things. And that's how it came about.
Let me ask you, Isaac, what sort of was the click that said, hey, you know what? I'm getting this pretty good. I understand what's going on. I've got people asking questions. Let's get something going here. What was the click?
Yeah. So, business is business. You find an opportunity and you're able to capitalize on the opportunity while having really great intentions. There was actually a guy, his name is Chris Johnson. He was the first one that kind of got me halfway interested in the market. When he started talking about more on the investing side, not trading side. And one of the things he says was, hey, you learn a skill and you could do a really good job of capitalizing off that skill by showing other people how to do the exact same thing. But obviously, a lot of people try to do that. And, some people are less ethical than others. But I think one thing that's always separated Blueprint from other businesses, other groups, other education platforms is the fact that, our intentions have always stayed the same. Reputation is very big, very important to me. And having a group of people under, that work with Blueprint and help Blueprint grow, having the same morals and ethical standpoints, that's something that's helped us grow over time while doing, our very best to help everybody who comes our way.
Right. I've been in this business since 1985, and I'm telling you, I learn something new every day from our Topstep, some Topstep speakers, all the way to our community here in chat. So it's a never-ending process. You're always learning something, which is great.
Absolutely.
Now, let me ask you, what markets are you trading right now?
I'm mostly on NASDAQ. That's almost my everyday. Sometimes I go back and forth from futures and options, just depending on how I feel. But I've always been super consistent in what I trade. Like even when I trade options, I'm usually with the NASDAQ or SP 500. When I'm trading futures, NASDAQ, SP 500. Very rarely I'll trade crude oil. But I would say on a day-to-day basis, I'm mostly trading NQ. Okay,
trading that NASDAQ, that speedy market.
I know.
What's your time frame on that? What are you watching on a time frame?
So for me, I use multiple time frames. So I'm a price action trader. I don't use many indicators at all, right? The only indicator I will use is the 9 EMA. And that's solely because it's a great trending indicator, helps me kind of maintain trades as well as manage my risk when the time comes. So I usually start my days on and I could actually break it down for you on the chart real quick, if that's okay, Eddie?
That'd be fine. We'd love to see that.
Sure. So for me, my day starts off on the daily chart. And the reason that is because I want to see the bigger picture. See, a lot of times what you'll see is, people kind of, from what I've seen, people like to make really drastic decisions about where the market's going to go based off individual days instead of the bigger picture. So I'm a bigger picture kind of guy. So for me, we look at, the daily chart, obviously I erased all my levels, but I'll put some back here. Obviously, we've been on a very strong uptrend the last few days. I've also noticed that, hey, we actually broke above this trend line resistance that we had as well. Not only that, but I did have a key support level that we broke through on Friday. So that's just a couple things I'm looking at just from a bigger picture play. Now, obviously, just because we broke out doesn't mean we're going to keep going. Doesn't mean, we could consolidate, we could chop. Who knows, right? My only goal being on the bigger time frame is me trying to just again get that bigger picture, that maybe possibly general direction. Now, one thing I noticed, hey, we've been on a multi-day uptrend. So obviously, maybe we need a pullback. Maybe we need something to possibly go further. Those are just things I'm thinking about, right? So as I start on the daily, then I go down to 4-hour, hourly. Really just depends, and that's when I start really zooming in a lot more to get those levels, right? Obviously, we're not going to take trades on the daily, but but I want to make sure that I'm aware of everything that's going on. So that may still be, you know, zooming out, making sure I'm getting everything. Obviously, these levels are going to be, as we go down in time frame, you'll have more and more levels. But this is what the day looks like for me. You know, I have that previous high of day, right? We had our pre-market low. I'm always aware of pre-market high as well. And I'm going to assume this didn't happen yet, because then we'll get into the trade I took today. But this is what my charts are looking like today, right? Do we have any trends that I need to be made aware of? Even understanding the situation again, we've been on a multi-day uptrend, right? Just because on an uptrend doesn't mean we're going to continue, right? For me, one thing I'm thinking about is, hey, we had a massive move on Friday. Usually what follows after that, a massive move, some type of chop, some type of consolidation before the buyers can pick up the volume and keep on going, or maybe the buyers aren't as strong anymore and the sellers step in, right? So those are the things I'm thinking about. So then we go to the 15-minute, right? Zoom in even more. Okay, so now we look very interesting, right? Because pre-market, one thing I've noticed is, hey, we have or actually, let me go back to the hourly. I forgot to mention this part. So one thing I'm thinking about as well, let me actually get rid of this real quick, is, hey, okay, we've been on the uptrend for a while, right? Buyers were ridiculously aggressive on Friday. Bigger time frame showed that we did break out of key levels very, very aggressively. But coming into today, coming after a move like Friday, I'm also knowing that, hey, we're starting off the day with a lower high. Or I'm sorry, was that right? Lower high? Yeah, lower high. Meaning that, hey, we have, you know, a high right here, then we have a lower high right here. Oftentimes, not saying nothing is ever absolute in the market, but one thing I think about when I see this is, hey, we may possibly start having some type of trend reversal, right? Not because I just see this on any time frame, but it is on a more so bigger time frame. I am seeing this on the hourly time frame, which as a day trader is a very important time frame for me. But then again, I'm also at the back of my head still understanding that, hey, we are breaking, we did break a daily level on Friday. So that's something you do have to consider regardless.
Right.
So that brings, oh, go ahead, please.
No, I like the way you've got a checklist that you're sharing with us, and you're going over each point. What I'm looking at, is there anything here? No, let's move on. Anything here? It looks like it's going to happen. And then we get even closer and you're saying, hey, the opportunity looks good. So I like that. I like that checklist that you do.
Absolutely. And the best part about it is that price action is price action. So the same setups I see on the 5-minute, I could very well execute those same setups on the 15, 30 hourly. Only difference is the amount of time those setups take the form. And also, the bigger the time frame that you find one of these setups, the more aggressive the breakout is going to be, right? So that's why I'm able to use multiple different time frames, get those perspectives, and and it kind of opens me up to more opportunity, because I used to only use the 5-minute, but then I realized I'm limiting myself to 5-minute opportunities, and that's it. And then I opened it up to the 15, 30 hourly, and I found myself not only being able to find more opportunities, but even finding more confirmation for the plays that I took, because I found multiple reasons why I should be in this trade on multiple different time frames.
Right. You pull back and you see the bigger picture, and it's giving you more opportunities. Now, speaking of the fast market and the NASDAQ that you're trading, you're out in Vegas. This question came in. You're going to be checking out the Las Vegas F1 race this weekend?
I will not, because when Vegas has events, the traffic is absolutely ridiculous. Oh my goodness.
Okay.
You go on the strip, you better get a bike. You go faster with that, because you won't. Yeah, it's ridiculous. I think there was an Ed Sheeran concert. Topstep, actually, we had a Topstep event in Vegas, in September, end of September. And I think there was an Ed Sheeran concert at the same time, and you couldn't go anywhere. It was ridiculous. Traffic was absurd by the strip.
So he's got priority over Topstep. I gotta talk to his agent. Here's a question from chat. As far as discipline, Isaac, are there any similarities between being a D1 athlete and being a trader?
Oh, I would say it's in the same field, in terms of the level, the level of discipline you need to have. In trading, you have to do a lot of stuff you don't want to do on a daily basis, right? I want to hold this trade longer. I want to size up heavier, right? I want to trade just because the market's open, even though I don't see my setup, right? And in athletics, hey, you got to train when you don't want to train, right? You got to eat a certain way, even though you don't want to eat that particular way, right? You have to give 100% every single day, and you have to have like one of the hardest adjustments I had to make from high school to college was, and meanwhile, my college coach played under Mike Krzyzewski, which was, for those who don't know, the greatest coach of all time at Duke University basketball.
Duke,
Coach K. And there were two coaches that were under his three coaches that played for Krzyzewski, championship teams, right? So they brought Krzyzewski's mentality with them, right? That's just how they coach. And let me tell you, one of the hardest things that I had to overcome as a D1 basketball player was consistent effort, right? Doing good one day isn't good enough. Doing good for a week isn't good enough. Giving your all for a couple weeks isn't good enough. That's expected every single day, right? And there's no ifs, ands, buts about it. Because if you don't do it, right, if you're good 6 out of 7 days a week, hey, that one mishap may cost you some playing time. Oh, now the coaching staff can't trust you, right? Now the coaching staff, has an opinion formed about you based off, hey, we don't know what this dude's going to bring because he's not consistent enough. And in trading, the only way you're going to see results is if you're consistent, right? Consistent with your approach, consistent with your risk management, consistent with your setups that you take, consistent with the level of aggression that you're trading with, right? You can't size one contract, and be really good at that. Then all of a sudden you're trading 10 contracts, thinking that you're ready to size up, right? So there's so many different similarities, and honestly, you can go on and on and on. But I would say that's the biggest part for me, that every day showing up.
There's a lot of stress being an athlete and having somebody that you've got to check in with as a coach, manager. But when we're trading, we're our own coach, our own manager. We're the second voice telling you, hey, let's work on this or watch out for this, like your checklist that you had. And I think that brings a lot of success to traders when they've got that second voice, when they're questioning themselves, when they're complimenting themselves, when they're patting themselves on the back saying, hey, you know what, next trade will be better. I think that gets you through a lot.
Yeah, I mean, self-talk is very important because you have to understand you understand, you've been doing this since 1985, but you have to be. So one, we are going to be our own worst critics, right? Nobody's going to be harder on us than us, and you have to understand with that dynamic, that dynamic that comes with trading in the market. You're also the only one on your team. You're also the only one that can control. Team. Yeah, that's it. So you have to have a way to talk to yourself in a way that is only beneficial. Because I see people, again, you understand the business I'm in, the education business. You have to understand that, hey, I get a lot of people that come to me with so much self-doubt and just talking bad about, oh my gosh, I suck. I'm not smart enough to do this. But then they also want my help. I'm like, dude, the first step is you have to believe you can do it in the first place.
Right. You hit the hammer on the nail there. You got to have, right. I mean, you've got to believe in yourself. You got to have the passion. You got to have the desire. You got to want, especially in this business, because there's a lot of rejection that might sit you on your ass or turn you the other way. But for those that keep getting back on the horse, those are the people that see success. Well said. Well said. Let me ask you, Isaac, strength. What's your strength in trading?
My strength in trading is I have short memory. I have short memory after the good days. I have short memory after the bad days. I think one thing that a lot of people do is they think about the previous trading day on the current trading day. Like there's some people who had a really good day Friday and they're still riding that high. So maybe they oversized today. Maybe they were really aggressive today, or maybe I don't know what happened and they gave some of that money back. There's somebody who had a really bad day on Friday and they're revenge trading, or their mindset, their mind is just skewed. They're not fully prepared for the day. I believe it's great to have short memory after good and bad days because, hey, after a good day, today's trading day has nothing to do the success of today, the failure of today has nothing to do with the previous day at all. And I think that's a really good strength to have, because I then approach every day with the same level of seriousness and the same level of respect, because it's the market. Nobody knows what's going to happen. I could do all this charting and stuff, and I could be completely wrong. So you have to give the same level of respect to each and every day.
Right. You know, how about a weakness? I mean, I catch myself a lot falling back into bad habits, but you know, since I've did it for so many years, I can see the red flag as soon as it pops up, and I don't get myself in trouble too much. But what are some of the weaknesses that we all have, that something that you've experienced?
Yeah, one of my weaknesses, man, is that I am so freaking competitive. With every single thing I do, and in the market, you're competing against. You're not. It's not a competition, but if it were to be, you're competing against yourself. How can I be better than I was the previous day, the previous week, the previous month, the previous year? And I think, you know, when you put a level of work in, you expect great results. But sometimes, hey, today's not your day. This week's not your week. And I feel like sometimes I fall into I guess you could put it under the category of emotion, where I would just be so freaking mad, like, bro, I knew better than that, or like I expect myself to do a lot better than I do sometimes. But hey, you know, then that self-talk comes in, right? Yeah, and sometimes like every trader, I go on tilt. Sometimes it just happens, right? It's definitely not as bad as it was, 2 years ago, where I can now just step away, because now I feel like I am at the certain skill level where if I don't make money tomorrow or today, I'm confident I can make money the next day, the next day, the next day, just because I put a level of work in that kind of gives me that confidence.
Right.
But yeah, I would say that's my weakness, and just like I'm just ultra competitive, but I need to sometimes do a better job of, hey, just shift the perspective. That's all it is. It's how you view things, is how you think about things. So that's one of the things I'm constantly working on.
Ultra competitive. I mean, that's a blessing, because the thing is, it's going to be that hot coal under your butt. It's going to be, it's going to be the voice that says, you know what, hey, you could do this. Keep going. Mm-hmm. And I think every trader does need that. That's something very important. As far as your trading goes and so forth, how about risk? How do you manage risk in your trades?
Yeah, so if let's take prop firm accounts, for example. Okay. When you trade prop accounts, you don't necessarily have to think about things on a numerical level in terms of how much money you're risking, because it's really about contracts, right? So when it comes to risk, I always tell people, hey, don't try to move faster than you're emotionally capable of. And what I mean by that is, so back before I knew what prop firms were, I used to trade, like I said, I traded options. And one of the biggest problems I had was that I over risked, and I didn't understand the concept of less is more, right? Right. So what I did, I remember I used to be in $25,000, $30,000 trades, right? In one trade, and I would make, $5,000, and in my head I'm thinking it's a great trade, but in reality that's a horrible trade. You're risking 20. You're putting on, not risking, because you're not going to lose 25, 30,000 in one trade, even if you're sizing that heavy. But you're putting on 25, $30,000 if you have a $5,000 win. That's horrible. And I started to realize that. So what I did was I remember liquidating my account, and I left $5,000 in there. And I said, you're going to work on maximizing trades, holding your following your trading plan, and you're going to make sure that you do this. And you're consistent with the growth for a certain amount of time before you level up. So when we think about prop firms, right, we take Topstep, right? Let's say you have $100,000 combine, or express funded, whatever it is, and you have obviously that 10 contract limitation. I tell people that people that come through Blueprint, hey, look, right now you feel you're on this high because you have access to money that you really didn't have in your personal account. Now, here's the thing though. You don't want to just get rid of this account, right? Let's say you're a new trader. New traders, hey, focus on trading with a certain amount of size, being consistent with that. Not consistent in income, because I was consistent, using $25, $30 and then making $5. But you want to be a trader that maximizes trades. You want to be a trader that's emotionally removed from the trade. You want to be a trader that's consistent in those two things all the time. And the way you do that is, hey, I know I'm a new trader. I know that I can't really handle the volatility of NQ. So I can't really handle the volatility of ES even. So maybe let me trade the micros, right? And let me practice scaling in. So even as I scale in, I'm mitigating risk. Right, I'm not going to hop in a full position as soon as I get into the trade. If it goes against me, I lose a lot of money. If I scale in, then I'm able to slowly build my position, right? And then, hey, I'm a new trader. I'm still not comfortable sizing heavy yet, so I'm going to trade micros, and then I'm going to scale in with my micros up until I get 1 mini, right? 10 micros, 1 mini, right? So that's one thing that I did, and then as I proved to myself emotionally and financially that I was able to consistently trade that size, then I slowly increased my size. But some people think one good week with this size is grounds to, size up the next week. But for me, it was a, 3 to 5 to 6, 7 month process before I really started scaling up. So that's like kind of one of the foundation of risk management for me.
See, that's strong management skills, where you're not pushing the envelope too quick, where you're not rushing yourself through this strategies and so forth. And I think that's what a lot of people need to understand is take your time. All right. Things aren't just going to change. Like you said, you have a good week and then the next week you're sizing up. The possibilities of risk of losing that whole week plus. So gradually, so you're not getting hit very bad. That's well said. How about, since we got your charts available here, some of the questions are coming in. How do you determine to enter a trade and exit a trade? What are you looking for, Isaac, when you enter a trade?
Okay, yeah. So first off, before I even show you guys the charts, I want to let you guys know that what I look for is what I practice. Right? What I look for is what I train my eyes to see all the time. The setups I only have maybe 2 or 3 setups, Eddie. I don't have a lot of stuff that I trade that I look to trade. But I try to limit myself to high quality setups. In my opinion, a high quality setup is one that you look for all the time. One of my biggest problems when I was a beginner trader was I used to try to trade every single move. Sometimes I just simply, at this point, I don't care about if the market moves if it wasn't in my strategy, right? So that's just first things first. So I'll kind of break down today's trade that I took.
Okay.
I only took one trade.
Cool. Okay.
I was one and done. I traded NQ. So I think last time we left off, I was on the 15-minute chart. And if we go down to the 5-minute chart, this is what I was looking at with the team this morning. Right. Again, we noticed on the hourly we had that higher low. Right. That's just one thing I'm thinking about. And then I saw that we were kind of holding this pre-market level here. Right. I saw that we have a level here. Right. Even if we extend this to the left, we can see that this is a pretty decent level. And I'll zoom in just a little bit so we can see it. Right. Made a move down, consolidation. Right. I'm already thinking, hey, we need some type of pullback. Possibly we're having that higher low situation on the hourly chart. Right. We even broke this trend line, if you will, going into today. So there's a lot of different things that help me want to be short today. Now, I will say one of the hardest candles to trade in the entire world is NQ's opening candle. That candle is so doggone volatile. Right. So I will say I did get in shorts on this initial candle, but did get stopped out once we started retracing here a bit. And then eventually it committed down below that level. This here was a key level for us this morning. And let me put this and I'll show you why. Right. If we go on. Oh, I think it's already there. Never mind. There we go. Cool. Right. So for us, we wanted this move under this 15,511 level for NQ.
Okay.
So really my style of trading, I'm a breakout trader, right? Breakouts, breakdowns, and reversals. That's usually what I look for. So for me, again, finding multiple reasons to want to get in this trade is key for me, right? So if you break this down, hey, we not only did, you know, we're pretty much, we broke this trend line. We have that higher low in the hourly. We went on a massive move on Friday, right? So either we're going to get a lot of consolidation or maybe a pullback, right? Even though this one was a kind of a pullback and then we took off. Anybody who trades in Q knows you don't need that big of a move to make a decent amount of money. And on top of that, again, the only indicator I use is a 9 EMA. So not only did we break under this pre-market consolidation, right? Volume, obviously, beginning of the day is going to be really good. We're respecting this 9 EMA, meaning that, hey, we tested the 9 EMA, we rejected, we tested again, did we reject it? And then our final price target was here, which is a level I had right here and, you know, before this as well. And so we call it really, honestly, an absolutely amazing move, right? 3 bearish candles to the downside. And then once we started seeing us slow up a little bit, then we decided to get out the trade. You know, one of the things that I know a few of my guys had questions about was, Isaac, how do you hold a trade when, you know, something like NQ, as powerful of a ticker that is, pulls back, right? Because you can see right here, we had a pretty decent pullback for NQ. Now, for this particular trade, I made just over 12,000. But even on this pullback, I went from probably up 7 to up 3, right? So that's a pretty big swing for a lot of people. How I hold this trade, I believe, let's see if we can see it here. If it shows on this one, I may need to update the setting. Yeah, that won't work.
Okay.
But for me, one thing I look at volume a lot. So when we break out, obviously when we break out, we want a lot of volume. When we pull back, a lot of times with these pullbacks, if you want to, for me personally, if I want to determine whether a pullback is actually going to be like a reversal or if it's just going to be a simple pullback, I usually look at the volume. Usually pullbacks with low volume aren't really going to be really great pullbacks. They're just going to probably be a retest or something like that. Not only that, but we are respecting the 9 EMA. For me, I like to use this as when we're beneath it and I'm short, I use it as a resistance level. And if we break back above it, then I will most of the time get out my trade if there's not a level down here that I'm already looking for it. But yeah, that was my trade today. Just a simple 5, 10, 15 minutes from opening to about 9:45, 10. And then that was it for me.
Now, let me ask you, what's the best trade you've ever made?
Ooh, the best trade. The most profitable trade I've ever had was, I think it was 63,000. Yeah,
trading the NASDAQ, right?
This was, I believe this was 5. I believe this was ES. It was
okay.
It was like an all-day hold. It was a massive trade.
That's a nice number. That's a real nice number.
Yeah, it is.
Let me ask you, Isaac, how do you stay abreast with the ever-changing financial markets? Do you follow the news? Do you read the eco?
You know, I may have an unpopular approach to this, but I actually try my best to stay away from news as much as possible. The only time I want to be aware of news is if I know it's going to affect the market right then and there. CPI, PMI, job reports, things like that. I will be aware of it. Hey, we have news here, or Powell speaking or something like that. Hey, maybe I'm not going to trade during this super volatile time. I know some people love to trade news, but me, I like to stay away from it. I find that having a very simple approach to the market is the best way. That's why you see I have a price action strategy, but you don't see a bunch of stuff on my charts. I try to keep my focus on the price action. And again, I will be aware of news and things like that. But over the years, one thing I've noticed is that, you know, the charts a lot of times they align with the news, right? A lot of times they'll show you what's happening. And, you know, sometimes I've taken trades and then, you know, we had a really good move based off a move that I was able to analyze based off solely price action. Then to find out that there was actually news around the same time, right? That probably helped propel this the right way. So that's just my, like I said, it may be unpopular, but I prefer to keep my head on the charts.
You know what? Whatever works for each individual trader, stay with it. It's like take the ball and run with it. If it works for you, fine. And that's what a lot of us, you know, are trying to figure out. What works for me? Got a question from our YouTube channel. They're asking about on your chart, what's the purple and blue line? Blue line on top, purple on the bottom. What are those lines?
So the reason I have these purple and blue lines, these usually are entries and exits for me that I look for. So every time I have a purple line on my chart, it's probably a really, really strong level, right? I found on one of my time frames, right? I don't isolate my I don't like color code my different time frames or anything like that. But when I see it, when I have a purple line on here, it's like, okay, yeah, this is a really, really strong level. Like for instance, this right here for me would be a purple line as well, right? Just because you can see here, multiple rejections, right? False breakout here. Volume was really crappy. So I'm not surprised that this came back down, right? If we were to get a strong, let's say today we were able to get a strong move or strong push towards this level and potentially break out, I would definitely be looking for a potential move here. If that were to happen. But that's usually something I put just like in the moment when I'm looking, like just to keep my mind sharp, and when I'm analyzing the charts.
Let me ask you, Isaac, what do you think are good qualities? Or let me rephrase that. What do you think the qualities are that make a good trader?
A good trader, I think probably the most important quality is a good trader has a longevity mindset. A good trader is somebody willing to chip away, not necessarily somebody that wants to come in and get it right now. Because when I talk about trading, you're talking about an industry where you can get paid, of the likes of professional athletes, actors, right? Lawyers, doctors. These are this kind of money a lot of people are making in the market. But I think social media is probably something that kind of makes people lose this idea, or people just got to understand, hey, it's not an overnight thing.
Right.
It's something you have to be willing to work at for a long time. So I think somebody who is patient but has a really good work ethic, those two combinations right there are probably the best qualities you can have in the market. Because somebody who's patient is obviously somebody who's willing to do the work, and somebody with a good work ethic is somebody who's going to do the right work and do the same level of work for a consistent basis until they get the results they're looking for. A lot of people aren't willing to suck, right? You got to be willing to suck for a long time. I lost a lot of money. Like you asked me my biggest win. Right, you've asked me my biggest win, but my biggest loss, like my biggest win was 60-some thousand. My biggest loss was also, I think, 64,000. Right, back when I had like crappy risk management. Right, I was making a lot of money, but then I had no risk management to back it up. Right, there's hard lessons that I had to learn time after time after time again, and not take that as a means to quit. Although you will want to sometimes, but also understand like, hey, the only way I can guarantee I fail if I stop trying right now. But I know that eventually I'm going to get it. Not because I was doing something special. That's just that's who I am as a person. Like if I'm going to do this, I'm going to do it. Right. And I wouldn't be able to sleep at night if I just chose to pursue something else because it got hard.
Right. We got to experience failure. If we didn't, we wouldn't know how to get any better. Mm-hmm. And I mean, it's a good lesson. I think we learn more from our failure than we do with our success. I mean, of course, we want to see success, but that's always that failure that sort of sticks in the back of the head. And could I have did something different? Did I do something wrong? And you're going to learn from that. And like Isaac says, it takes time. It takes a lot of time. So don't be in such a hurry, break things down, journal. Go over your trades. What did I do right? What did I do wrong? And this is going to get you to the level where you want to be. So keep that in mind. Now, Isaac, we're short on time here, but I want to make sure I get these couple questions in. Somebody comes to you, a newer trader, and asks you for advice. What advice would you give somebody new to trading?
Seek education first. Don't be me, who I was when I first started trading. It's not that I didn't like education. I wasn't willing to invest in myself, but I was ignorant to the fact that education is the best way to do it. Eddie, you're somebody who's very experienced in the market. If I'm a brand new trader, do you think I can learn a lot faster and a lot more if I were to say, hey, Eddie, I know you have a mentorship program. can I give you money to teach me your 30 plus years of experience so that I don't have to, spend the next 5, 6, 7 years trying to figure it out. You can just tell me what I should do, what I shouldn't do, what I should practice, what I shouldn't practice, good habits from bad habits, so I can skip the trial by fire that everybody goes through in the market who does it by themselves. I would say invest in yourself. Like YouTube videos are great, but find somebody you really like, find somebody you really respect, and then invest in yourself. Because I promise you, if I had invested in a mentorship, no mentorship was more expensive than the money I lost in the market. Right. And not only did I lose money, but I lost a lot of time. Who knows where I could have been, maybe 3 years earlier had I sought that education first. Yeah. So if you're a newer trader, I would say don't even try to just get in here and start trading, because you can do it by yourself. But I believe you're much more efficient if you do seek help first.
Well said. Invest in yourself. I mean, it's all about you. Like we said earlier, you're the team. All right, it's all about you. You're making the calls. You're setting up the game plan. You're executing the shots. Mm-hmm. So it is about you, and you want to make sure that you're doing the right thing. I can't agree more with that, Isaac. Now, Isaac, as I mentioned before we got on, that I have a fun question for you. Okay. Now I've got about 20 questions. So between the numbers 1 and 20, you pick a number, and I'm going to ask you that question.
Oh goodness. I'm going to choose number 5.
Number 5. Let's take. Okay, here we go. Number 5. What's the most memorable concert or live performance you've ever attended?
Yeah. So I was in Houston in 2021. And I got courtside seats to see LeBron James play for the first time in person.
Wow, courtside, huh?
Yeah, it was great.
Do you feel them like zipping by you when they come by? Do you feel that gust of air? I mean, that's like being right on that's like playing, man.
It was nice, man. It was nice.
That's cool. That's cool. Now, before we let you go, my friend, if you can, please tell us about how we can get to tradewithblueprint.com. How can we get to that? What's in there? What do we need to do?
So the way we work, we have a community, a Discord where I trade live every single day. You can find all of that information on my Instagram, YouTube, wherever. That's it's Isaac Suffren everywhere. ISAAC SUFFREN. And I also, as you know, Eddie, as you mentioned earlier, I do have a mentorship program as well. Where not only myself, but other proven and just absolutely ridiculously skilled traders are they help coach the program as well, and all our members within the program. It's absolutely wonderful. All that information can be found, like I said, on my Instagram, YouTube, wherever you look. Just type in Isaac Suffren, and all that information will be there.
Beautiful, beautiful, beautiful. Well, Isaac, I really appreciate you stepping up to the plate for us. I'm going to ask you now so I can get a commitment. Can we have you back again?
For sure. Just let me know.
Awesome. So, hey, if you like what you heard, you like the mentorship and the camaraderie that Isaac has given us, hit that button, hit that like button, subscribe, and make sure that you check out tradewithblueprint.com. I posted it in the YouTube chat, and I'm sure that Danielle and Jack has posted it also. But Isaac, man, great time here. Keep up the great work. Keep teaching people. It's a good thing. It's a plus benefit, and being as positive as you are. I don't see how there's a losing venue anywhere that you can offer. So keep it up. Great stuff. And I'm looking forward to getting you back again.
I appreciate you, Eddie. I had a really good time.
All right. Until we meet again, my friend, all the best. And remember, tradewithblueprint.com. Isaac, have a great week. We'll talk to you soon.
Yes, sir, Eddie. You have a good one. Thank you.
All right. All right, boys and girls, we're going to take a little break here. We've got John Hoagland coming up. No, actually, I'm sorry. Top quiz coming up with, I believe, Jack and Bonnie, right? Jack and Bonnie going to be up here.
That is correct.
That is correct. I hear that Jack just told me that. And then after that, don't forget, stick around, group coaching. The Hoag's got lots of questions to be answered, and I'm sure that he's got a good answer for every one of those. So that was Isaac. That was a cool interview, man. I enjoyed that. Good stuff. Glad to see that people are putting hard work in and seeing success. But we'll be right back with Top Quiz. Don't go away.
Trying to make it work like I'm floating through space, but it's difficult. Bonnie, how are you doing today?
I'm doing great. How are you?
Well, of course you're doing great because you are the guest today on Top Quiz for Monday, November 13th, 2023. If this is your first time here, 4 trivia questions, multiple choice. If you get 3 right or 4 right, you enter a random drawing and we will give away 10 resets today. So enter by clicking that link. That's the easiest way. Otherwise, go to kahoot.it and enter that game pin, which is a long way to do it. All right, Monday. How's your Monday going, Bonnie?
It's going well. A little stressful, but excited to start the week off strong.
Always exciting to start the week off strong. This is always the lowest energy I'll be the entire week, but I only build from here. So remember, there's a delay between us talking and you hearing it on YouTube. So you're going to keep your eyes on your device or browser because that's where these questions are going to pop up. Resets. Some people I'll alternate it between giving away resets and combines, but we'll have to make a gentleman's and gentlewoman's deal is that if I give away combines, please do not, if you win, then ask me for a reset. It's time consuming. So we'll do combines tomorrow, but today we're doing resets. Get in quickly because we're going to start shortly. If you don't get in, we do this every day. All right, Cisco 22, Ligma Johnson, Pickle Rick, a Rick and Morty reference.
I love Rick and Morty.
You too, it's the best. And no 2-letter, JC, don't do 2-letter sign-ins. It's just lame. Make me laugh. Got Wicked Soft in the house, Mr. Snows, Nader Sauce. These are all good names.
Jack, have you seen this Disney movie called Elemental?
The Pixar one, I've heard about. I have not.
It's so good.
Okay.
I watched it this weekend. I thought it was so cute.
I will watch it. Right now, the only movie we watch in our household is Cars 1, Cars 2, and Cars 3, because I have a 2-year-old who's obsessed with Cars, Lightning McQueen.
Nice.
Ask me anything about Cars. I've seen those movies 800 times.
What is his favorite car?
Oh, he likes Lightning McQueen.
Nice.
Talking non-cars cars. He loves fire trucks. Fire truck, fire truck, fire truck. All day. All right. We're going to get started very shortly here. Are you ready, Bonnie?
I'm ready.
Okay. Without further ado, we are going to start right now. All right. Who intro that takes too long. 3, 2, 1. Question number 1. According to Hogue, the initial balance at the beginning of the trading session lasts how long? Is it 1 minute, 30 minutes, 1 hour, or 2 hours?
Would it be 30 minutes?
It could be. I have to wait until it ticks down a little bit to say if you are right or wrong on that. I believe the answer is 1 hour from what Hogue does. That's why I preface by saying according to Hogue. But lots of you came through there for the bragging rights board. We have Shorter McGavin. That's a good name. Loving Shorter McGavin. Big Happy Gilmore fan. Is this thing on? It is. You're on the board right now. All right. The 1 minute is the opening range, not the initial balance that Hogue uses. All right. Ready for question 2?
Yep.
All right. Let's do it. Which of these equity indices is not market cap weighted? The S&P 500, the Dow, NASDAQ 100, or the Russell 2000? Any ideas here, Bonnie?
I feel like I always hear S&P and NASDAQ.
Yeah, I mean, those are popular.
The Dow?
You
Or
are
DLW?
damn right. It is the Dow.
Yay!
That's one of the reasons people who watch this for a while know that I have a bone to pick with the Dow. And this is probably the biggest one, is that it's not even market cap weighted. It's, I believe, just based on points, which is an insane way to do it. But if you want to keep trading the Dow, I can't stop you. This is a free program. All right. Bonnie, you're 1 for 2. Let's see who my Dow people, Dow haters, Plutarch, best DC ever, Ping win. What does that mean, Jack? Market cap weighted means, like in the S&P 500, the components of it are weighted by how large their market capitalization is. So Apple is the biggest company, so it makes up the biggest chunk of the S&P 500. I'd have to go back and look how the Dow does it, but I believe it's just straight up based on points, like the price of a stock. But the price of the stock doesn't mean anything, Bonnie. The market cap does. Anyway, sorry you had to endure that rant. Okay, next question. Get your paper. Here's a math problem here. You can see it on your screen. Wait a few seconds until you give your answer here, Bonnie, so we're not on the delay. All right, what's your answer?
12.
You are correct. And a bunch of other people are too. Good on all y'all for please excusing my dear Aunt Sally there. Just want to check sometimes. Okay. Let's see the leaderboards. Cooking right here. NQ NQ hurt me. That's pretty good. Let us know if you're all right. Tell us if you're being held hostage by the NQ. We want to help you. There are other ways. Okay. We have one question left. Bonnie, you're 2 for 3.
I know, I'm doing pretty good.
All right. Are you ready?
Yes.
Okay. Final question. What is the CME futures product code for soybeans? We discuss today. Is it ZB, SOY, SB, or ZS?
I feel like it wouldn't be soy because that would be too easy. So I'm gonna guess SB.
It's close. It's ZS. I would love it if it was just like bean or something like that, but it is indeed ZS, as we mentioned today. Yes, people who did not say 12, are they making money trading? It's possible. I gotta tell you, from when I was working at a prop shop, quick multiplication was the biggest math thing that you were always doing. All right. Let's see for bragging rights. And Bonnie, you got 3 or 4 right today, so you would qualify for a chance. Oh, Tendy Collector, the Wall Street Bets community there. And in first, remember, not winning the prize necessarily, is Pickle Rick. All right, Pickle Rick coming through. And Bonnie, 3 out of 4, starting off Monday blazing, you would have qualified for a free reset today. All right. Well, with that, congrats to the folks on the podium. I will select randomly the winners, and I will display them at some point during group coaching today. So stick around. Hoag's going to be dropping wisdom all over the place. Bonnie, so glad to have you here today. Hope you'll be back sometime soon.
Yeah, good to be here. Thank you, Jack.
All right. We'll take a quick break here to get Hoag settled in, and then we'll be back to group coaching. Stay tuned.
Welcome, everyone. It is time for group coaching. Top Steps group coaching we like to call Let's Crush 2023. My name is John Hoagland. I'm the senior performance coach here at Top Step. Got 40 plus years of futures industry experience. More like 31 years as an active trader. I traded on the floor of the Mercantile Exchange for 20 years, migrated to screen trading in 2009, and since about 2011, I've been here at Topstep, hopefully helping traders improve their knowledge of trading and self, and hopefully getting a lot of traders closer and closer to where you want to be. It is our goal to see your success. This is the CFTC disclaimer. I should probably know it by heart by now. Just keep in mind that everything we discuss today is for educational purposes only. We won't be discussing the purchase or sale of any product or security at this time. And this reminds us that there is a lot of risk in futures trading. These are leveraged products. We run the risk of losing more than our initial investment because of that. We should only be using risk capital, which is, to me, money that I can afford to lose. Again, we're not suggesting the purchase or sale of anything here. There's also a part of this rule that says hypothetical or simulated performance results have certain limitations. Unlike, to me, the biggest limitation in some random sim account is the fact that you have no accountability, no rules, and no consequences. You're not going to know how you're going to trade until you feel those consequences, and just keep that in mind. I mean, I usually kind of talk about the fact that many people have discussed with me why it's so easy to trade on sim and why it's so difficult to trade in the trading combine. And it's just that there are consequences. And once those consequences are felt, it changes the decision-making process. Now, I've got a couple of emailed in questions that I'm going to discuss first. If you do have questions, I will try and get to all of them in the chat. Sometimes there's a whole lot of them and I'm not able to get to them. But we will do our best. If you do have questions, please try and remember to add a couple of question marks, and that'll help me find them in the chat. So what I'm going to do is I'm just going to put up the charts for now. And there's the S&Ps. And we're going to talk about these questions. First one is from Fred, and he's got a screenshot of his chart here, and just I think there's a couple of things that I need to clear up here. Fred, I hope that you're here, and thank you for emailing me in these questions. Fred always has really good questions. They're always really based in market information, and I think that they're important. I know Fred has a question. Many folks will have a question. So he starts by saying, forgive me if my memory isn't clear, but I seem to recall you saying, don't fade range extension. Is that a correct quote? Seem to remember you saying something like, don't fade range extension, but I don't remember the context in which you said this. It's been a couple of days since I think you said this, and I find myself thinking about your idea. I realize I may not understand what you mean. Okay. So, Fred, I mean, if it was last week, there were some well, let's see here. Here's Friday, November so if it was last week, I mean, the market was still kind of, largely pushing to the upside. We had one pullback and then the big push on Friday to the upside. If we're going to be fading range extensions, we want it to be up against an important level, or we want to be able to see that the auction outside of the initial balance or whatever the range extension is has failed. So I'm not going to be taking I'm not going to be fading range extensions on a directional day, right? Take a look at Friday. I mean, Friday was a very directional day. I even said, if this market starts to rally into the rest of the day today, don't fight it. That would be, in essence, Fred saying don't fade range extension. If you did, you got whacked, you got whacked, you got whacked, you got whacked, you got whacked all the way up. But I did mention on Friday, don't fight a late Friday rally. A late Friday rally, for some reason, just has a tendency to eat shorts all day long and then just keep pushing to the upside, keep pushing to the upside. So in that regard, that would be something that I would say, don't fight range extension on a directional day. When did we figure out that this day was probably going to be directional? Right about the time I think you were thinking about taking the short against the previous day's high, which wasn't necessarily a bad idea because it allowed you to limit the risk. So Fred says he likes to trade near the extremes of the day's range. So I'm often trying to make judgments about the success or failure of an attempted range extension. Does your idea mean wait for the level to be penetrated before fading, then enter the trade when price comes back inside the level? That's not necessarily a bad idea, Fred. And I think you were kind of already in that frame of mind when you were looking to take this trade. Now, this was Friday. The market opened, looked lower, rejected. I was looking for longs a little bit lower, so I didn't catch good trade location on this. And then the market just continued to push higher. So once we started basically one time framing higher, be very cautious about taking fades against range extension. In this case, here's the previous day's high, right? Here's where we were. The market looked above, came back inside the previous day's high. I see your order here to sell it here at 1175, and you're really tight as far as your risk management is concerned. Hopefully in this case, Fred, I know you well enough to say you're hoping that the yesterday's high, the failure to continue immediately above that high, pulling back down below, offered you the cheap opportunity to take the short. If you took the short, it's not out of the realm of possibility. It's just kind of a lower probability. The market has become directional. What time is this? This is the 11:30 bar, so we're coming around to noon. The market's one time framing higher. It's a Friday, and we don't want to fight directional moves on Friday, particularly rallies. Now, Fred, if we think about who was involved in this big emotional upside move, we did add open interest, estimated 11,000. Let's see what the actual was. I'm going to pull that up off screen here. So the actual was only 8,545. So this morning's preliminary said 11,000 plus, and only 8,500 contracts were added to longs. If these were shorter or medium time frame speculators, they're pretty late to the party. Anyways, so getting back to your question, Fred, hang on one second. So you faded the attempt of range attention, saw the directional market one time framing higher to test the weekly high, which was basically the previous day, I think. You sold short. My short trade seemed like a cheap trade to me, and I agree with that, Fred. It looked like a cheap trade to me as well. If that would have held, it would have, possibly been a very nice trade, but it didn't. Okay, did you violate the idea saying don't fade range extension? Do you remember the context in which you said not to fade range extension, and explain what you meant? So if it was last week, if you remember last week, we were really centered around the weekly kickoff level high, which was 43.94. If we were to be trying to fade range extension, it would have actually worked on most of these days, just had to find the right level with which to do so. If I was talking about the week before, which was directional almost the entire week, it would have made sense in that context to say, yeah, don't be looking for opportunities to sell range extensions, especially to the upside, because the market is really directional to the upside. And Fred, if you remember, I was not all that impressed by volume and open interest on this big push to the upside. It doesn't matter what I think. Sometimes these markets they're so resilient, they're just going to do what they're going to do. All right. Today, could we have tried to sell the range extension from this morning? Well, it didn't work. Maybe there was a little bit of a pullback. Then we were looking at, all right, well, how about the overnight high? Well, that one didn't work either, but we don't have to lose a lot on those opportunities. Last week's high, we looked above, pulled back. I actually took a short and made some money on this little pullback here, but the market is still directional, basically, to the upside, so I did not marry that opportunity. This is really starting to look more like a bull flag than anything else. So I'm not going to attempt to fight or fade the range extension above last week's high, above our current session high here. The market seems to be pulling back. Volume is dropping. Ranges are smaller in this little 30-minute pullback here. What's it look like on the 5-minute, Fred? All right. So if we were to take a look at this as a bull flag, okay, we've got 1, 2, 3 points of contact. Acceptance above that could bring buyers to come in and finally finish this gap from 2 weeks ago. So I don't want to fight this range extension. I took it because it looked above the last week's high, pulled back, gave me an opportunity for a decent short. I wasn't falling in love with it. I wasn't risking a lot on it. And that was the one winner that I've had today. So that's okay. That's all right. Now look what we're doing now. We're kind of breaking out on the 5-minute chart of 1, 2, 3 points of contact, breaking out of a potential bull flag. I don't want to fade this. If I was doing anything, I would look for an opportunity to try and get into a long, but it's noon. What am I doing here? What am I doing here? Okay. So Fred, there's no, I don't think, finite rule in whether or not it's okay to fade or to go with breakouts from initial balance or range extensions. Okay, so we are, everything, Fred, as you know, is contextual. And anything that I say is a in air quotes rule. Even in my own trading, there are things that kind of negate that rule. Today in the S&Ps, the opening range was left at the high of the regular trading hour session. My rule is I'm looking for shorts until that gets taken out. We had a short, we ended up getting stopped out on it. It's okay. What I'm doing is I'm kind of doing a bit of an experiment to see how often the opening range, when it is one side or the other, provides a bigger opportunity. Now, 2 weeks ago, there were 3 days in a row where the opening range was the low of the session, and those opportunities would have provided, $2,000, $2,500 per contract by the end of the day if you stay in them. So I'm kind of running a little bit of an experiment to see how that plays out. But Fred, anything that I say is subjective, right? I mean, the opening range rule, it's a rule until it gets proven wrong. Well, when we took out the high of the opening range, it was proven wrong. Trying to determine whether a breakout of initial balance or a range extension should be faded or should be gone with, that's intuition. Maybe that's the ability to be able to read price action in the dome. I'm looking at the idea that Any breakout or range extension, I want to see that it's robust. I want to see that there's a lot of change, a lot of orders being placed and canceled and price moving around, moving in that direction or not moving in that direction. We're getting a pullback, using the high of that for an opportunity to limit risk and seeing what happens. But there's nothing that works or doesn't work. There's nothing that works every time. There's nothing that never works. It's all in your ability to assess the number one, the risk on the opportunity. Of course, that's number one. We're all going to be good risk managers. We're not going to lose. We're not going to take trades where we have to lose 50 points. Sometimes lately I've been a little bit risk averse, and I've had a couple of good trades get stopped out. That's okay. These are my issues. These are things I'm dealing with, and maybe we can all learn from them, which is a great thing. I'll get it straightened out. I'm not worried about it, and I'm not going to lose a lot of money about it. So we're gonna have some fun and see how all this kind of plays out over time. I'm hoping that I haven't had my last winning week or month or a year, but I've had losing weeks, losing months, and even pretty close to losing years in trading. And it doesn't freak me out. It doesn't scare me. I've just got to do some work and get things straightened out as far as my decision-making process, doing this in front of God and everybody. So, back to your question, Fred, where are you? So it's always subjective. Your trade, I don't think, was foolish. It was cheap. It wasn't going to hurt you much. But, just, I guess, kind of try and remember that on Friday rallies, you can't fade it. You can't fade it. I even said that on the opening call and in the prep on Friday. If this thing starts rolling higher, don't fight it. The late Friday rally is vicious, and it certainly proved to be one on Friday. So I hope that helps and answers some of your question, Fred. Some of these, a lot of these questions, the subjectivity is so much part of the answer, because everything's about context. In the right context, yeah, you're going to want to fade range extensions. But, let's think about that, Fred. In a market that is directional in the longer time frames, and it's directional to the upside, am I more likely to fade range extensions below value or below price? Range extensions downside, am I more likely to fade those on a longer time frame move to the upside? Yes. Am I less likely to fade range extensions that move price higher in a market that is in an upside market state? Probably a lot less likely to do so. So everybody, take that as you will. The daily chart for the last, 2 weeks ago was really strong to the upside. Until that something breaks in that, then I'm looking probably more likely to fade range extensions on the downside than I am to fade range extensions on the upside. Take a look at, okay, so that was the 830 bar. Oh, here it is. So there was a range extension on Friday that failed. The downside auction looked below the regular trading hour session. This is the initial balance low, is the low of this bar right here. It looked below and rejected. This range extension would be something I would be much more likely to fade, because the market has been moving higher. I was looking for more of a pullback, so I missed the best trade location on this. I think Andre actually got a long here. I don't think he held on to it for very long, but it was good trade location. So I think this is a really good example, Fred, is if the market's moving higher, you're probably going to be more likely to succeed fading downside range extension in an upside market than you are fading upside range extension in an up market. So that, that could be kind of a basic rule that you might want to keep in mind. The market was somewhat range bound. It was so centered around that weekly kickoff 43.97 for 2 days. Finally broke, looked to the upside, and that Friday rally just I'm sure it ran over a lot of people. I thought a dozen times, all right, the high is in. We're not going to get into we're not going to close the gap. We're not going to, but I heard in the back of my own head, don't fight Friday rallies. Don't fight Friday rallies. Now that said, Fred, next time we have a big Friday rally and you're thinking about fading a range extension, it'll probably work because the market loves to make a liar out of me. All right. So the next question that I have here is from JP. I know the tick value for TPOs is a personal preference, of course. I have been successful with a 4 tick value in the NASDAQ and a 1 tick value for the ES. Do you prefer GLs, CL, GC, YM, and RTY? Well, I'm the same way with the S&P and the NASDAQ as far as the TPO charts. The S&P usually has a range that I can pretty much keep on one page, on one screen, using single tick TPOs. But the NASDAQ is so rangy, and there's the ranges are so wide by the number of ticks that I have my NASDAQ set at 4 tick value, just like you. As for crude oil, gold, Dow, I keep those at 1 tick TPOs as well. Now, you're always going to run into the odd day when the range is going to be so big, but you'll just have to scroll to where the price is, or where the market is, to see your opportunities. Okay? So you've got things set right for the E-mini S&P and the NASDAQ. I'm still single ticks. As long as I can stand the range, it's single tick TPOs, because you do, I believe, you do find that you miss some detail in the profile when you have multiple tick TPOs. But the NASDAQ, I don't see that we miss all that much. I hope that helps. JP has another question. On trend days, do you wait for pullbacks into volume nodes, shoulders to enter, or midpoints of single prints? So this is a really good question, JP. I'm going to bring this chart up. Whoops. Okay. So this was Friday, and I separated each 30-minute period, except this one. For some reason, it won't let me split this one. So the first 30 minutes, we know on Friday, this is the 10th. So this is Friday. So we were really range bound and quiet for the first hour and a half. Once the market started to move higher, if we were of the frame of mind to where we were going to be looking for opportunities to try and get into this move to the upside. So I don't know if I can do this. So I've got it split into 30-minute periods so we can see the volume shoulders in the particular 30-minute period that we happen to be in. So is there an opportunity in this 2-bar? Well, we left single TPOs. Let me go through a couple of these, and then I'll close up the profile and we'll see what it looks like all together. So here's F period high. F period high accumulated some pretty decent volume here. The next volume shoulder, the next high volume node, I should say, is down here. Okay. So, and this is the NASDAQ that we're looking at. 15,461 is the next high volume node. If we're going to be using the low volume node for support, when price comes down to this, the volume shoulder is from high volume node to low volume node. These are what I call shoulders. Where I'm looking for the opportunity is in the shoulder. I don't want the market to come in and take out too much of the low volume node. I want it to use that as support and continue the move to the upside. In the NASDAQ, it might be a little tougher than that. What are we looking at? Even if we bought close to the low tick here, 476, we're looking at 461. So we're looking at 15 points, 15 handles of risk to the high of the next volume node to the downside. That would suit our good friend Michael Patak. He's 15 point stops, 15 point profits. If he looked to buy it on this low volume shoulder, he would have had a successful trade to the upside. Where do we go now? Well, the market moves higher, puts up a whole bunch of volume. This is a little bit trickier because you've got a low volume node here, a little bit of volume here, and another low volume node here, a high volume node, and then back to low volume node on this bar. If you looked at this one and said, okay, that's a low volume node. If I can get in on this shoulder, maybe I can risk only down to here, maybe 10 points. Well, if you took it, you were okay. What about the next bar? Next bar opens here, drives higher, volume starts to accumulate here, low volume here. Using this volume shoulder might have given you the opportunity to stay in the trade for continuation to the upside. Let me split all or close all the merge all the profile. So now, we're looking at a low volume node here in single ticks. Part of your next question is, do you wait for pullbacks into volume nodes, shoulders, enter, or midpoint of the single prints? Midpoint of the single prints. It is a very important thing to think about doing that because, JP, if you're going to have a lot of traders that are going to be looking at these single TPOs as support, those that are already long are likely going to put their stops below this previous bar. If the market did come back down there, it would probably take out those stops. Now, it doesn't work in this case. The market was too strong. The next bar never came back down there. But if you are suspecting that it's an obvious level, then getting in where where all those stops are would be a much better trade location, help you limit risk. And if we take out all of the TPOs, something may have changed. How many times have we seen the market take out all of the TPOs and then rip back to the upside? It's because this is going to be all stops. Stops here and stops here. So the market continues. If we looked at this as access, as support, maybe we were able to get into this and be able to manage risk. That's the whole thing. If the risk is too great, if we're risking 20 points on this, and that's too rich, that's too much, then look for the next opportunity. And we really kind of got one here. I mean, this bar here, this G bar, which is 11:30 to 12, the market opens. Look at all the volume here. Look at all the volume here. We start, you might have even started to see Delta fall off or Delta kind of get crushed here because this looks like an accumulation. Okay. This is a lot of volume in a short period of time here. If this is an accumulation and we're buying it on the lower volume shoulder and our risk is to the other side of this high volume node, we really probably got in at a pretty decent location for continuation. Volume shoulder here again. We're looking at this in hindsight. It makes it very easy. But when you split the profile, and if you have volume profiles for each 30-minute period, which we're not going to get on this, I'd have to split them piece by piece, and I don't want to do that and waste too much time. Remove. Okay. So that is, one of the things, when the market's directional, is there a rule as to, wait until the midpoint of the single prints? Do you wait for the high of the volume node to get in, or do you look for the volume shoulder? Every situation is going to be a little bit different because these markets know when you've got the right answer, and they're going to change the questions. So there's no right or wrong way. It's all very situational. And I hate that I have to keep saying that, but it's so true. Good. JP says market profile has changed his trading for the better. That's great. See, that makes me very happy. It makes me very happy. And I hope that this answer was helpful for you. And I'm going to go and see what kind of questions that we might have here. Okay. We have a lot of love for Jack. That's good. Maybe went a little too far back. Did I take that short? You talking about the one from Friday, PBJ? I did not. But I did take the short off the high today and made a few shekels on it. Wasn't going to be marrying it because the market, by all rights, is still directional to the upside. Hello, Anissa. It's good to see you. I haven't talked to you in a while. Tanner. In the last 2 weeks, I have become a ridiculously worse trader than ever before. These slumps are crappy. Do you recommend taking a full week off when you get too involved in the market? Yes, I do, Tanner. And I'm feeling kind of like I'm in the same situation. I haven't really been able to dig my teeth into anything. I've been gun shy. I've been risk averse more than usual. Just doing this on screen has changed my decision making a little bit, I think. And that and the fact that it's very distracting, I think, has also made a difference. So I'm trading one lots. I'm not going to be leveraging into anything. I have a personal account that I've pretty much been holding off on. I making a little bit of money in that. But it's the Topstep account that I'm really trying to focus on and get my head wrapped around, because I'm not taking trades that are intuitively telling me that they're whispering to me, yes, this is the one, and I'm doubting it. And I'm taking trades that make sense, but maybe, I'm not comfortable with the risk, so I'm getting stopped out on a lot of this stuff. It's okay, Tanner. It's happened to me 1,000 times. I definitely suggest taking some time. Take some time off. Don't think about trading. Don't look at the charts. Go somewhere in the woods and go for a nice long walk. I find that sometimes God talks to me when I'm lost alone in the woods. And, the woods around me, I mean, I know I'm within 2 or 3 miles of a major road or a strip mall. So it's not like I'm getting lost in the wilderness in Montana or Wyoming or Colorado. But it just kind of centers me, I guess, kind of humbles me to know, I'm lost in the woods and I got to find my way out of this, and finding my way out of this is like one step to finding my way out of the woods when it comes into trading. It's just one of the things. But during that time off, you gotta just let go. You can't be holding the venom that we all hold in our veins when things don't go well. And we may think that venom is for the markets or for the fill that you didn't get, or the rough trading that you've been doing, anything like that. That the anger and the venom is not for the markets. The venom is always for you. It's only going to affect you. It's not going to affect the markets. You get angry at the markets and you get mean with people around you. It's not going to help that. You really just have to be able to forgive. You have to be able to give yourself, because no matter what the situation, if you're mad at a bunch of people, or you're mad at your wife, or you're mad at the dog, most of the people you're mad at don't know that you're mad at them, and a lot of them probably don't give a shit. So the only person that it's going to affect is you, Tanner. So, I feel just in your comment that you're down on yourself. You're a little angry that things are not going well. You got to let it go. Sometimes, we become so involved in the markets and we look at them so closely and so intently that we fail to recognize things that are right before our eyes. And that venom, that anger, it's going to make it more difficult for you to see things correctly and make good trading decisions. So take some time, let go of the venom. As soon as you can laugh at yourself again, then maybe it's time to come back to trading. But there's been a lot of periods of time. Guys tell you guys all the time, I've quit 1,000 times. But I've always come back. It's something that, I know I'm never going to master the markets. I don't think anybody can. I've only known one person who I would really consider a master decision making in trading, and I'm not even sure he trades anymore. So, this is a journey that has no end, if you will. As long as you continue trading, you're part of that journey. The only time that this journey ends is when you're done trading. Hopefully, Tanner, by that time, you've made so much money you can retire and live on a yacht. But you got to do it one day at a time. You got to do it with good decision making. And you got to take that time off. Take that time off. You said it. If you feel like you're too involved in the market and things aren't going well, there you go. See, now we're getting a potential breakout of the bull flag. I'm already kind of beyond my risk on this. Well, let's just watch and see what happens here. Tanner, bless you, man. Bless you. I've been there. Take some time. Let go of the venom. It's not easy. It's not easy. Danielle, you've been very active. Thank you for answering all these questions about accounts. Thank you very much. Hi, Karmic. You can email questions to me at groupcoaching@topstep.com. groupcoaching@topstep.com. Those you can email your questions, and Karmic, I will look forward to answering anything that I can answer on Wednesday. I don't think I mentioned earlier, but there's nobody that knows everything. Anybody that says they know everything, don't trust them. I don't know everything. I know what I know, and I'm going to be able to tell you most of what I know. So I probably forgot a lot already, but and if there's something that that I can't answer, I'm going to be honest with you. I'm going to tell you that, and that's going to give us an opportunity to learn possibly something together. It's one of the things I love about these sessions. Andy, I'm an idiot. Any tips? Yes. Don't call yourself an idiot. Don't call yourself an idiot. The markets, this is a very difficult thing to do. Very difficult thing to do, Andy. So, I think even good traders are idiots. And I shouldn't use that name, but it's a matter of degrees. Educate yourself, trade, learn, take small lumps, learn, look at your homework at the end of the day. Say, what was right in this? What was wrong? Take a look at the charts at the end of the day and say, okay, there were a couple of things that I could have missed that may have provided better outcomes for me. What are they? What did I miss? What worked this time that didn't work last time? All of those things. Andy, you got to educate yourself. You got to review your performance. And in reviewing your performance as a trader, it is of ultimate importance for you to be consistent in your decision-making process, which is easier said than done, of course. But, if you have a strategy, if you sit down in the morning and you say, if the market does this, this is what I'm going to try and do. If the market does that, then this is what I'm going to try and do. And if the market does this, this is what I'm going to try and do. And write out those hypotheses. And then at the end of the day, how well did you stick to what you said you were going to do if this happened in the market? Give yourself a grade. If it's a 1, great. If it's a 5, then you got work to do. Jared Tendler's book is fantastic for this. His hand idea of what's the problem, how can I find the root of the problem? Do I have the root of the problem? All of these things are things that over time will hopefully eventually improve your performance. So there's no idiots in this. I believe anybody can do this. Anybody can make money. It's a matter of self-knowledge, market knowledge, and strategy. Self-knowledge plus market knowledge times strategy equals profitable trading. All right. The top quizzers will be announced at some point here. He's going to do that at the end of group coaching. So you'll find out if you won. Hopefully you did. Yeah, Joe, we've looked above the late spike. We opened below it. We've looked above it. So far, we haven't been able to take it out. That's for sure. It's good to see you, Joe. I miss having conversations with you on Make Hope Money. Coop, good. I'm glad. I hope everybody enjoy these sessions. Hogue, do you use the power of 3 accumulation, manipulation, distribution? I'm not sure what that is. I don't trade multiple accounts or attach multiple accounts, if that's what you mean, Jay. Andy, yeah, break even a day on days here. Better than red, 100%. An orange day, as MP calls it, right? Yeah, Mitchell. I mean, when you can't see the forest from the trees, take a look at the bigger picture, longer time frame. Sometimes just taking that little break can also kind of remind you. There's a checklist that I've provided to a lot of folks here in group coaching. I call it the market performance worksheet, and that's kind of an outline of how I prepare for the trading day. And if I don't kind of use that and go through it, I forget parts of it. And sometimes one of those parts that I forget is the part that I really needed. So it's something you just got to do every day, right? Got to do it every day. Chart language, thank you very much. Everybody here at Topstep, though, really has the traders performance and the traders in our hearts. So we are looking forward to everybody's success, and kind of could imagine if everybody was successful. Deeyana is a good trader for sure. Mark, yes, I am here to try and help everybody get better at what they're doing here. 100%. 100%. Yes, Coop, the inchworm concept is one of my favorite things to work on. A, B, and C game also work. Absolutely. Absolutely. So, Coop, you've been reading Tendler's book. That's good. He's going to be here this week. Make sure if you have questions for him, you get them answered. Dagan. How do I stick with my strategy? When the market goes against me, I kind of get skeptical about my strategy. How do I eliminate this? Looking for an aspect of trading psychology. So, I think when Jared Tendler comes on today or this week, I think I may kind of talk to him a little bit about this. How do we trust? How do we trust our strategies? Strategies are never going to work all the time. As a matter of fact, I find that certain strategies are going to work better than others in certain market states, right? Like basically, very basically, if a market's range bound, I fade the extremes. If the market's directional, I try and trade only in that direction. Sometimes I'm a little bit contrarian, like today. I caught a short and made money on it. Wasn't going to marry it. You got to remember, anything that's contrary to the bigger picture is a shorter time frame trade. You're not going to get a big move out of it unless you get lucky. So, you mentioned with my strategy, do you have different strategies for different market states? Is usually the question I'm going to ask here. Directional markets, it's a different market state than a range-bound market. Directional markets, I'm only looking to trade in the direction of the market until proven wrong. So if the market's consistently moving higher, I'm only really looking for longs. If it's the opposite, market's moving lower, I'm looking for opportunities to find shorts that I can limit risk on, number one. And that I can look for better opportunities because I'm with the bigger context of the market. Market's been moving lower. I may be able to expect a bigger profit target if I'm congruent with that. If I'm incongruent, short time frame trades. If I'm congruent, longer time frame trades. And then, what if the market is range bound? Was range bound for the better part of last week in a bigger picture, but there were some pretty good shorter time frame trends in it. But, when I'm looking at the daily chart and I see, even highs and even lows, well, those are important levels for me because market's been proven too cheap down there and it's been proven too expensive up here. Those are levels that I might look for some larger opportunities. And then, of course, if we break out of range, that's a go with type of situation. So there are folks out there that try and put a name on, market states I know people that have 24, 30 market states, like they try and identify the current market state. Basically, it's either range bound or in a continuation, range bound or trending. Range bound goes to trend, back to range, back to trend, back to range, back to trend, back to it's just a cycle. The market can't go in one direction. Sometimes it needs to range to even out inventories. But if we overcomplicate it, then it makes it very difficult to review that information at the end of the day. If there's too many things, kind of bleeding into your trading as far as the decision making is concerned, it's going to be very difficult to remember all of them at the end of the day and review your performance. Well, I had an upside digestion market state, and that's one that I sometimes will call a market that's been moving higher but has fallen into range. Upside digestion, and all the stars are aligning, and the fibs and the Bollinger Bands and the alligator bands and all of these things are giving me opportunities, or giving me different signals and all of this stuff going on. Oh my God, how do you go back and remember what you were thinking in those types of situations? If we overcomplicate things, we can certainly kind of slow our learning curve from that. So don't get too busy with all that stuff. But I feel you, Dagan. The only way that you're going to be able to learn to trust your strategy is to trade your strategy. To trade your strategy. L Short, thank you very much. Why don't you guys ever analyze the cash? Well, in essence, we're trading the futures of the cash. Alexa, I think it comes from a long time ago. One of the smarter traders that I knew was always, kind of keeping one eye on the cash. On the trading floor, we could just look up and see what the SPX was doing, and it would just kind of update every second. The price would change every second, and he kept an eye on it. And I saw him. He was checking it and watching it. So I start watching it, and I'm not really getting too much good information from it. The S&Ps are just kind of following directly right after. And I said, "Why are you always watching the cash?" He says, "You know what? I have no idea. No idea. It just makes sense, right? That's the cash. We're the futures. Why should we should be watching the cash? I have no idea. I get more information from the futures, from the market generated information from futures than I do from watching it. Any other product. It's like trying to trade the S&Ps while watching the Nasdaq. It's not gonna work. We gotta focus on what you are. And Alexa, I'm not saying that there may be something you've noticed, something that you're able to use to your advantage by keeping an eye on the cash, but that's good. Keep using it. The longest trade I've ever been in. Well, as far as futures trades, I'm a day trader. Always been a day trader. When I did something overnight, it was by accident. Unless it's a trade that is really going my direction, and I've got a good lead in it. Probably 3 or 4 days. 3 or 4 days. S&P right now. Well, we had a break of a bull flag. How did it do? I was kind of bummed I wasn't more prepared to take the trade. It was worth 5 points so far, but if this continues, this move to the upside, of course, it would be worth a lot more. I don't know. As long as we hold this trend line, we're in an upside market state. Like Joe says, I mean, we're kind of stuck here inside Friday's late spike, which, the longer we stay here, the more likely it is that we're accepting higher pricing. So right now, it's starting to fall into range. So I'm going to be really patient. All right. Jack, are you ready?
Yeah, I am ready. Let me see what we got here. All right. Well, it's time to announce some top quiz winners. What do you think here, Hogue?
Yeah, let's do it.
All right.
They've been very inquisitive as to when are we going to find out.
Right now, as a matter of fact.
Right now.
Viking, Nash, Kakaprost, Topex, Zinget, 169er, yes, Bofadis, Goheda, Frozen, and Saul with SALL. Those are our top quiz winners for today, Hogue.
All right. Thank you, Jack. And congratulations on all of you. It was resets today, wasn't it?
Yes, indeed. So I'll send it out later this afternoon. I got a few meetings first, but it'll get to you. I promise.
All right. Well, thanks, Jack.
Hell or high water.
Thank you, Jack. And, well, it's going to be it for the group coaching. Thanks for, it's always good to see you, Jack. You look like you're really out in space there.
Yeah, I was trying to play with it earlier. Still can't quite get it right. It looked better in Gravity or whatever that film was. But yeah, great group coaching today. I kind of like the space background.
It looks good.
It's kind of fun. So with that, Hogue, I'll let you sign it off. It's your wisdom.
All right. Well, thanks, Jack. I got a little dad wisdom for everybody. So, yeah, Dad was a floor trader for 40 years. And here's one of my favorites. The market always looks the best at the top and the worst at the bottom. Think about that tilt. And everybody's one way. They're all short. Look out. The low may be in. When they're all long and everything looks great, the high may be in. Thank you, everybody, for joining me today. I look forward to seeing everybody back here for group coaching on Wednesday. We got a lot of good stuff coming at you this week. And we look forward to seeing Jared Tendler. We got Trade with Hogue. We got Trades with Matt. We got all kinds of stuff going on. So be kind to yourselves. Be kind to others. Please make sure and remember to say a prayer for peace. And we will hope you had a good trading day. And we'll see you in the morning. Bye now.